Okay, so my voice is audible, everyone? Screen visible, voice audible, please confirm once. Okay. Okay, so very good afternoon, all of you. Let's begin with today's lecture now. Yesterday, we were doing depreciation. So, in depreciation, we understood that how to calculate the depreciation in case of assessees who are engaged in the business of power business. Then we saw that how to calculate the depreciation under section 32 subsection 1 clause 2, that is normal depreciation in case of all the assessees who are engaged in any business or any profession. Okay, so we were into this 32 subsection 1 clause 2. Okay, so in clause 2, if the assessee is engaged in any business or profession and he acquires the assets for his business or profession, then the value of the block of those assets will be determined. Those assets will not be individually treated. Those assets will be, group of those assets will be formed. Okay, and the group of those assets will be known as what? Block of assets. Okay, so the value of that block we have to calculate, and once the value of that block is calculated, on that we'll apply the rates given in appendix 1. Okay, and appendix 1 rates we are supposed to apply on this value of the block, and by applying these rates, whatever depreciation we calculate, that depreciation we are supposed to claim on WDV basis. So we did few examples also, yes or no? And what is the block, how the value of the block is determined, everything we have discussed yesterday. Okay, so one small question arising in my mind. Okay, for example, there is opening WDV of the block. Opening WDV. Opening WDV has 4 assets. The value of those assets is 10 lakhs. Now in this block, few assets are coming. Additions happening. Few additions are done in the year and put to use for 180 days or more. Few are less than 180 days. One asset. Okay. For example, this is 2 lakhs. And this is 8 lakhs. So total is 6 assets in the block having 20 lakh rupees of value. Now this should be the value as on the last day of my previous year. On this value, I have to calculate the depreciation. Yes or no? But I'll not be able to calculate the depreciation on this entire value. Why? Because during the year, few of the assets might have been sold. So I will have to reduce those assets because those assets are no more present in the block in my business as on the last day of my previous year. So I will reduce those assets. Those are known as what? Deletions. Now for example, 3 assets deleted and giving me 14 lakh rupees. Tell me how much value will remain? 6 lakh. 3 assets still remaining. Now I told you yesterday, when the value remaining as on the last day of the previous year in the block, if that value is less than the value of that asset which was purchased during the year and put to use for less than 180 days, and that asset is still there as on the last day of my previous year in the block only, then on that entire value I have to apply full rate or half rate? Half rate. For example, this was plant and machinery block. Yes or no? Plant and machinery depreciable at the rate of 15%. The block was plant and machinery block. then this full rate will not be applicable, only half rate will be applicable. So I will not be calculating the depreciation at 15%, rather the depreciation will be calculated at 7.5%. So this thing I told you yesterday. Okay, what if this value was higher? For example, here instead of 6 lakh, it was 11 lakhs. Then on 8 lakhs, I would have calculated half rate. On the balance 3 lakhs, I would have calculated full rate. Meaning that if you want to calculate the depreciation, there is a requirement that as on the last day of the previous year, what did I say? As on the last day of the previous year, assets should be present in the block and there has to be value present in the block. Yes or no? So two things are required. One, the value of the block should also be there and there has to be assets also in the block. Only then I will be able to calculate the depreciation. What if assets are there, value is not there? What if value is there, assets are not there? What if asset is also not there, value is not there? In that case, I will not be able to calculate the depreciation. Depreciation cannot be claimed, cannot be calculated. So if you want to calculate the depreciation, two things are compulsory. Number one, end of the year, the block should consist some asset. And against those assets, there has to be some value also. Only then you are able to calculate what? Depreciation. Okay. So let's now understand that what will happen in different scenarios. Okay. So I will put 4 cases in front of you. 4 cases. So this will be my case number 1. This will be my case number 2. This will be my case number 3. And this will be my case number 4. What I am doing, you will understand. Don't worry. If I say opening, add, additions, greater than equal to 180 days, less than 180 days, then I will do deletions. Okay. So for example, I'll take that same example which I took earlier. Okay, no? 4 assets, 10 lakh value. 1 and 1. This was 2 lakhs and this was 8 lakhs. So total is 6 and 20 lakhs. Now, for example, I sold 5 assets from the block. How many assets I sold? 5. And after selling 5 assets, I am having 18 lakh rupees as a recovery or a sale price. Can I get this? All the blocks I did not, all the assets in the block I did not sell, but 5 assets from the block I sold. So do I still have asset remaining in the block? Come on, tell me yes or no. Yes. 1 asset still remaining, sir. Do I still have 2 lakh remaining in the block? Yes, sir. 2 lakh still remaining in the block. Meaning that block has asset also, block has value also. In this case, I will calculate what? Depreciation. Now the question arises, on this 2 lakh rupees, how much depreciation to claim? Full rate, half rate? See, if this asset is still there, then on that entire 2 lakh, half rate. Understanding or not? But if that asset is not there with me as on the last day, on the value I will apply what rate? Full rate. Yes or no? But the depreciation calculation will happen 100%. Sure. So tell me, Here I will calculate what? Depreciation. Depreciation calculation will happen. Perfect, sir. This is done. Now coming to the second thing. Same example I'll write. 4, 1, 1. Here it will be 10 lakhs. Here it will be 2 lakhs. Here it will be 8 lakhs. This is 6. This is 20. Can I say I have sold 5 assets and now I am getting 21 lakhs by selling 5 assets? Possible? Not possible. 5 assets of the block I sold. I did not transfer all the assets. Still I got the recovery which was higher than the value of the entire block. So I got a recovery of 21 lakhs. Now can I say one asset still remaining in the block? But there is no value remaining in the block. Value becomes nil. So asset is there in the block but there is no value remaining in the block. Entire 20 lakhs recovered by selling 5 assets of the block for 21 lakhs. So can I say 1 lakh still extra I am getting? Extra 1 lakh rupees of recovery I am getting. Now in this case I cannot calculate depreciation because on what value I will calculate depreciation? Entire value recovered only, no? So if the entire value recovered, I will not be able to calculate the depreciation. So no depreciation will arise. Here depreciation will not arise, but the value which I have recovered over and above, the amount which I have recovered over and above the value of the block, is it my gain? Yes or no? This will be treated as my short-term capital gain under section 50. And my dear friends, here I will not calculate depreciation. No depreciation, only the short-term capital gain will arise. Yes or no? Did you understand this case? Now, same example, continue. 4 assets, 10 lakhs. 1, 1. 2 lakhs, 8 lakhs. 6, this will be 20 lakhs. Okay. Now what if I transfer all the assets in the block? Possible or not possible? All the 6 assets transferred. Entire block transferred. And I am getting 14 lakhs only. 14 lakh rupees only I am getting. Possible, not possible? Now is there any asset in the block? No. No asset in the block remains. But still 6 lakh value of the block remaining. No asset, but the value remains. Now on this value, if you want to calculate depreciation, you have to remember that the asset must be present as on the last day of the previous year in my business. For that asset, the cost of that asset only can be claimed in the form of depreciation. Tell me, against what asset you can assign this cost? No asset only remaining. So even this value, even if this is the remaining cost of the asset which I could not recover, I cannot claim the 6 lakh in the form of depreciation. So will it be a loss for me? The 6 lakh will be my loss only, no? 6 lakh cost I could not claim in the form of what? Depreciation now. So that 6 lakh will be my loss only, no? So claim it as a loss, but as a capital loss. Short-term capital loss. Yes or no? So this will be treated as my, this extra, wait. This 6 lakh which remains, this amount. I write down 6 lakh. This 6 lakh will now be treated as my short-term capital loss under section 50, and here also I cannot calculate and claim depreciation. No depreciation can be calculated and claimed. Yes or no? Last case. 4, 1, 1, 10 lakhs. This is 2 lakhs. This is 8 lakhs. Total 6 assets, 20 lakhs. Now all the 6 assets I have sold and I have recovered 22 lakhs. Possible, not possible? No asset remaining, no value remaining. All the value recovered. Possible? And I have got 2 lakh rupees extra. 2 lakh rupees extra I received. So no asset, no value. If no asset, no value, no depreciation. Simple. But the 2 lakh extra which you have recovered, can I say this will be now treated as my short-term capital gain under section 5050? Yes. And here also depreciation cannot arise. 3 cases are in front of you. In these 3 cases, you cannot calculate and claim depreciation. Either short-term gain will arise or short-term loss will arise. But when there are assets in the block and against those assets, value is also remaining as on the last day of the relevant previous year, then only come and calculate the depreciation. Sure. In the capital gains chapter, no, section 50 will come. That time I will tell you YKT. You know this because I've already explained section 50. Done? There I'll just give you a few basic things. You'll come to know, okay, this thing we have already done in PGBP. Sure? Now pay attention. The first 2 cases, no? The first 2 cases, if you see, this and this, block is still there. Block does not cease to exist. Block is still there. But the last 2 cases when you will see, no, this and this, if no assets are there in the block, meaning the block ceases to exist. So these 2 cases are known as block ceases to exist and first 2 cases, block does not cease to exist, meaning there is still block remaining. In the first case, come on, in the first case, will there be asset in the block? Yes. Value is there, 2 lakhs. First case. Asset is also there. Value will also be there, no? So I will calculate depreciation on this. Reduce the depreciation. So one asset will still remain, but the value will be reduced by depreciation. And that balance value that will become closing for this year will become opening in the next year. Hello, sir. This one, this case, second case. Come on, tell me. Here. This second case. Block is there, but no depreciation can be calculated. So this asset will be used in my business in the next year. So the block will also go in the next year having one asset, but against that asset, the value return will be nil. Getting my point? Now, whatever new assets will be bought now will be an addition to this value. One asset, opening, one asset, nil. And addition, new assets will come and will be added here. But in the next year. Getting my point, everyone? Sure. But in the last 2 cases, block does not remain only. Next year, no opening will come because the block is not there only. Understanding? Sure. So this was your depreciation, different cases. Yes or no? I've already explained all these things. Now, considering the fact that we have completed almost entire discussion, I would like to ask you something. See, this is an assessee. Assessee is engaged in power business. So this assessee can be any person. But what type of business he is doing? Power business he is doing. So in his power business, the normal depreciation under section 32(1)(1), 32(1)(2). What was this? Individual asset, actual cost of individual asset. On that, appendix 1A rates, apply these rates. SLM depreciation, yes or no? Do you remember this? And what was this? What was this? 32(1)(2). Value of block, and on that appendix 1 rates. By applying these rates, whatever depreciation will be there will be on WDV basis. So tell me, this assessee who is in power business, he will calculate and claim which type of depreciation? First type SLM basis or second type? First type only, no? Hello? But this assessee wants that I don't want to calculate and claim depreciation on each asset on SLM basis. I want to calculate and claim the depreciation on the block of asset, value of block of asset on WDV basis. I want to follow block system. I want to follow block system and claim depreciation on WDV basis. Can he do so? Is he allowed to calculate and claim depreciation on the value of the block on WDV basis? The answer is yes. But this option will be given to him in the first year in which he has commenced the business. The year in which he has commenced the business, in that year he has these two options. So if he wants to claim the depreciation on what basis? WDV basis, then in the first year only he has to opt for this option. Yes or no? He will opt for this option, WDV basis. Then for the first year and all the years later on, his depreciation will be calculated on WDV basis. But what if in the first year he does not choose this option? Then for him, in the first year and all the following years, he will have to follow SLM basis only. Understanding? Everyone? Because see, here now, when we did depreciation yesterday, we did 32(1)(2), no? Which assessees can calculate and claim depreciation like this? Any person engaged in any business or profession. Did I tell you? Other than power business? No. Meaning that even the assessees who are engaged in power business are eligible to claim this depreciation. Because if they would not have been eligible, no, I would have definitely written that all the assessees doing any business other than power business. Is it written other than power business? No. Meaning that power business is also included. But for them, claiming this type of depreciation, the option to claim this type of depreciation will be available in the first year, the year in which they start their business, they commence their business. Getting my point? Hello, sir. So, pay attention. Check here. Assessee engaged in power business, he can claim normal depreciation on SLM basis also, on WDV basis also, he has the option. But this option has to be exercised in the first year, that is the year in which the business was started. Yes or no? But if this option is taken in first year, then in the first year and every subsequent year, depreciation will be calculated and claimed on WDV basis. If this option is not exercised in the first year, then first year and every subsequent year, depreciation under SLM basis only. Done, sir? Should I move ahead? This is the end of two depreciations. Normal depreciation under 32.11 and normal depreciation under 32.12. But in 32 subsection 1 clause 2, the WDV depreciation, no? Now, what will be the rate of depreciation? The depreciation rates which are given in appendix 1 to rule 5 sub rule 1. These rates I have to apply on the value of the block, no? So what are these rates? For different blocks, for different assets, different rates are prescribed in appendix 1. So we will go and see on page number 3.210 ICI study mat. Okay, 3.210. Can you see rates of depreciation on your screen? Visible, everyone? Pay attention. Page number 3.210, depreciation rate. First part is tangible assets. Second part will be intangible asset. Okay. So all the intangible assets, one separate block will be created. All the intangible assets, one separate block will be created. All the intangible assets will be there in that block only, because every individual asset, the rate of depreciation is 25%. So for intangibles, how many blocks can be created? Only one. All the intangible assets other than goodwill will go in this block. Hello? And what will be the rate of depreciation on the value of that block? 25%. So you have to remember this value. Put a star mark on that value in your ICI study mat. You have to remember this. Put a star mark. Sure. Now coming to tangible assets. Tangible assets other than land. Eligible or not eligible? Eligible, no? Other than land. Land is not an eligible asset. Land is not a specified asset for claim of depreciation. Other than land, building can be there. Tell me yes or no. Building can be there. So building will have 4 blocks. How many blocks? 4. Because there are 4 types of building which they are saying. Some buildings are residential buildings. So the buildings which are used in my business are residential buildings. Sir, residential building, how the residential buildings will be used in my business? To my employees, I have given some flats. I have given some houses to my employees to stay there. So those are those houses, those buildings which are used in my business, but used by my assessee, used by my employee in the business. So those are residential houses only, no? Residential buildings only, no? Which are used in my business to keep my employees. So all such buildings which are used in my business, which are residential in nature, the block will be created separately. Because for these buildings, the rate of depreciation prescribed is 5%. How much? 5%. So you have to remember this rate. All the buildings which are used mainly for residential purposes, but you don't have to include which type of buildings in this block. They are saying that don't include those buildings which are hotels and boarding houses. Or write down one more thing over here. Either hotel or boarding houses or guest houses. Hotels, boarding houses and guest houses. They will not be kept in this block. Other than these buildings, all the residential buildings which are mainly used for residence, yes or no? They will be classified separately and their block What rate of depreciation you will apply? 5%. Done. Now, there are certain buildings which are temporary erections, such as wooden structures, temporary type of structures. For example, I am in the business of construction. So in my construction business, the site will be there where I am constructing big building. So to construct those buildings, I would require the laborers to work on my site. So laborers will not every day come and go. I will have to make some arrangements for my laborers to stay on my site only. So I have constructed small hutments or small houses on the site itself for my laborers. So that laborers will stay there. They will work on the construction site. And once the construction will be over, no, then these small houses which I have constructed for them will be demolished. These houses which I have constructed for my laborers on my site are temporary structures only. They are building only, but temporary structures only. For them, a separate block will be created, separate buildings. These buildings are temporary buildings, temporary structures. If any wooden structures are also there, those wooden structures will also be covered under temporary structures, temporary building. Yes or no? So this block of building will have a rate of depreciation of 40%. So remember this also. Remember this also. What about other buildings, sir? Now I can have a building which I have constructed so that a water treatment plant can be installed in that building. Water treatment plant, you know, na? In my factory, the production process is going on. In the production process, water might be used, but the water which gets used in my factory for production, that gets contaminated, that gets polluted. So I cannot release that polluted or contaminated water directly outside from my factory. I will have to first treat that. I will have to first treat that water in my factory only in a water treatment plant, so that the contamination and the pollution in the water is reduced to acceptable levels, and then that water I can release from outside my factory. So water which is used in my factory is contaminated, polluted to make this, releasable outside the environment, outside my factory, in the environment. To release this water, I will have to first treat this water. I will have to remove the pollution which is present in the water. I will have to remove the contamination which is present in the water. Water has become dirty, so I will have to clean it and then release it in the outside my factory. So that treatment happens in a plant. Water treatment plant is set up. So to house that water treatment plant, a building is constructed. In that building, that water treatment plant is set up. So if there is a building used in your business, but in that building, water treatment plant is installed, those type of buildings will be having a different block because they are also having 40% rate. Sir, I cannot mix this and this. No, because this is also a building, but it is a temporary structure. And water treatment plant, the building which houses this plant is not a temporary structure. It will be a permanent structure where my water treatment plant will be installed. Getting my point? So that building also has 40%, but the block will be created separately. Getting my point? Hello, sir. So you have to remember this rate also, block 3 rates also. Now, if your buildings are not getting covered under block number 1, block number 3 and block number 4, all such buildings will be covered in block number 2. Hello, sir. Having 10% rate of depreciation. Office premises, block number 2. Factory building, block number 2. Godowns, block number 2. Shops, block number 2. all the other buildings which are used in my business or profession will have a general rate of 10%. Will you remember? And did you see that the hotels, boarding houses and guest houses, I cannot treat them residential buildings, yes or no? So I will have to include these also in my block number 2, because they cannot be in my block number 4, they cannot be in my block number 3, and from block number 1 I have excluded them. So where they will go? They will go to block number 2. Getting my point? So please write down here only, including hotels, boarding houses and guest houses. I will include them in my block number 2. Sure? 10%. You have to remember this rate also. So building all the 4 blocks you are supposed to remember. Sure everyone? Should I move ahead? So now the next block is for furniture and fittings. Furniture and fittings, only one block will be made. Furniture and fittings, only one block will be made, and that block will be 10% rate. Fittings means what? Furniture we know. Table is there, chair is there, desk is there. All these things are furniture. But other than furniture, few other things will also be coming in this block. All the fittings, electrical fittings, all the fixtures will come in this block. Sir, fixtures means what? The windows at your house or in the office. Windows. The doors, they are known as fixtures. Getting my point? The signboards which I have placed in my business premises, those are known as fixtures. So those fixtures will also form part of this block only. The switchboard, can you see a switchboard around you? That switchboard, the electrical wiring inside, everything will fall in this block. Even the fan, ceiling fan will fall under this block only. Furniture, fixtures and fittings. All these assets will be under one block. Having what rate? 10%. Will you remember this? Sure. So please remember this block also. Now coming to plant and machinery block. See, plant and machinery, the first 4 blocks, no, they are very confusing. Very confusing. So what I have done, I have made small chart for that. Wait, I'll show you that chart. I'll draw that chart. I'm not get. Wait. See, motor vehicles. Motor vehicles, plant and machinery or not a plant and machinery? Motor vehicles, cars, trucks, etc. Plant and machinery or not a plant? They are plant and machineries. Okay, no? So if I say motor vehicles, so there are 2 types of motor vehicles you will see. The motor vehicles which are used in the business of running them on hire. Meaning my business is flying, hiring, leasing my motor vehicles. So my business is what? Transport business. I'm into cab business. Yes or no? So my business is to give the motor vehicles on rent. Cabs also on rent. Transport business can be there. Buses are I'm flying, hiring, leasing buses, etc., trucks, etc. Yes or no? So my business is to run the motor vehicles on hire. Okay. So I can be in this business. In this business, I can acquire motor vehicles. So those are the main assets which are used in my business. Okay. And I can have motor vehicles used in my business, used in business or profession normally. Normally means my business is not to give the motor vehicles etc. on rent. Yes or no? My business is maybe I'm in the manufacturing business. But in my manufacturing business, I'm buying some motor vehicles to be used for my employees, to be used for my guests, to be used for my directors. I can buy some goods, I can buy some motor vehicles for transportation of my goods from factory to warehouse, warehouse to factory, etc. But my business is not to give them on hire. My business is not to ply, hire, lease or rent these type of vehicles. I'm into some other business, but in my that business, the motor vehicles are used. Getting my point? And now these two types of motor vehicles can be there. See, motor cars other than those used. See, motor cars other than those used. Here they are saying that motor buses, motor lorries, motor taxis used in a business of running them on hire. Motor buses, motor lorries, motor taxis used in the business of running them on hire. Now, if the motor vehicles etc. are used in the business of running them on hire, they are acquired on 23rd August 19 to 31st March 20 and they are put to use before 31st March 20. So, two types of motor vehicles can be there, used in the business of letting them on hire and others. Now here also there are two parts and two parts will be made on the right side also. What I'll do? These motor vehicles are acquired between what date? 23rd August 2019. 23rd August 2019 to 31st March 2020 and put to use on or before 31st March 2020 only. All these motor vehicles block will be created separately. Hello? Because see, in this case, no, government wanted to give some benefit to those people. See, sometimes no, government comes with some benefits in certain specific sectors. So there was a requirement to give the boost to the automotive sector. So the more vehicles like this you will buy, the more depreciation you will get. So if you will buy these type of motor vehicles, you will get more depreciation. But that was for a limited period. We don't want to give this benefit, extend this benefit for a longer duration of time, but we are giving you some dates. Between these dates, if you'll buy, no, you are going to get more depreciation. So the more people will buy, knowing about this, that I am going to get more depreciation, so that there will be a boost to automotive sector, automobile sector. Getting my point? So this notification came, and notification became applicable from 23rd of August 2019. And notification specifically was what? It was 2019 was, if I'm not wrong, it was election year. 2024 election happened, no, general election. 2019 also election happened. So in the election year, two budgets come. First budget came earlier, and then second budget came, and that time this announcement was made. Getting my point? But this announcement was made for a very limited period of time. From this date till 31st March 20. If you want to buy, you can buy. For these vehicles only, we are going to give how much? 45%. What is the rate? Can you see? 45%. See, 45%. Otherwise, the rate was 30 only. Otherwise, the rate was 30 only. But if in this period you had bought, no, the rate will be 45. The government wanted people to buy motor vehicles during this period. So they gave a little bit more depreciation rate at that time. So there might be some assets in your business which are like this, which you would have bought during this date. So you have to remember these dates. Between these dates, if the motor vehicles etc. are bought for my business of plying them on rent, giving them on rent, then for those motor vehicles, starting from that year, I have been claiming how much? 45%. But if the motor vehicles were bought prior to this date or after this date, then on those motor vehicles, 30% was there only. Earlier also 30%, and after also 30% is only there. Getting my point? So what I'm supposed to do here? I'm supposed to bifurcate this into two parts. First, I have to see that what is my business. My business is to give the motor vehicles on rent, hiring the motor vehicles. In that business, whatever vehicles I am buying between these dates and putting them on use on or before 31st March 20. So the block of these motor vehicles will be separate. Okay. In this block, depreciation will be at the rate of 45%. Getting my point? 45%. And I'm writing otherwise. Sir, otherwise means the motor vehicles for this business are either bought prior to 23rd August 2019 or they might be bought on or after 31st March 2019, or they might be bought in this date but they are not put to use on or before 31st March 2020. Then all such motor vehicles will come here in this block. Getting my point? So here the depreciation rate earlier was also 30%, and right now also it is 30%. Depreciation at what rate? Come on. 30%. Got it, sir? Got it, sir? Now, this was your block number 3 and block number 4. Remember these two blocks properly. Now coming to block number 1 and 2. Please check block number 1 and 2. You are using motor vehicles etc. in your business, but your business is not to give them on hire. You are using the motor vehicles in your business, but your business is not to give them on hire. So I am into this part now. Pay attention. I am into this part, right hand side. Used in the business normally. Normal business. In the normal business, whatever motor vehicles you are using, again you have to do this same bifurcation. Same to same bifurcation. Copy and paste, sir. This is my favorite activity, Copy paste. Here the depreciation will be 30% and there it will be 15%. See, 30% and 15%. Can you see 30 and 15? Remember these two rates also. It will be 30% and it will be 15%. During this period, no, the government wanted to, during this period, the government wanted to give the benefit to the transport sector, sorry, automobile sector. Government wanted maximum automobiles to be sold. Getting my point? Here it is 30, here it is 50. Please remember this chart. Okay. Now, coming to your blocks, plant and machinery block. First block done. These type of vehicles you will classify separately because the rate is 30%. Same type of motor vehicle you will classify separately if they are not bought in this during this period. Okay. There the rate will be 15%. Likewise, block number 3 and block number 4. The rates are 45 and 30. Now you will remember block number 5. No need to remember. Molds used in rubber and plastic goods factories. Molds, you know? Molds, no? So the molds which are used to give a shape to a particular thing. Okay. See, for example, if I am talking about this bottle, there is a proper shape to this bottle, no? See. So whatever bottles will be manufactured in the factory, these type of bottles, there will be a mold in which the raw material will be put, plastic will be put. And what will happen? In that mold, this kind of bottle will be made. And all the bottles which will be made by using that mold, no, will have same shape, same height, same width, everything will be same. So those molds which are used in plastic or rubber factories, those molds are also what? Plant and machinery. And they are eligible for a depreciation at what rate? At the rate of 30%. Okay. So even if you don't remember this, no problem. Okay. Next one. Aeroplane, aero engines. No need to remember. 40% rate. Air pollution control equipments, etc. What is the rate? 40%. No need to remember. Okay. But go through them properly once. Okay. At least once you should be knowing them. So pay attention. Plant and machinery used in semiconductor industry, covering all IC. Semiconductors, you know, na? Those circuits and all. So I have a factory where I manufacture this circuits and all. So in my factory, whatever plant and machinery will be there, that plant and machinery, for me, I will create a block having what rate? Come on, tell me. 30%. Then life-saving medical equipments. Mark this important. 40%. Where this will be used? In a factory or in a hospital? So if there is a doctor who is running his hospital, so in his hospital, there will be some life-saving medical equipments which he will be using, like ECG machines, oxygen machines. Then there will be one machine which will be showing that heart rate and all, monitors and all. So these are all life-saving medical equipments. So in the hospital, only the life-saving medical equipments will be used or other equipments will also be used. Other medical equipments will be used, no? So other medical equipments you will not classify here. Here you will classify only life-saving medical equipments. The block of life-saving medical equipments will have a rate of what percent? It will have a rate of 40%. Yes or no? But write down here only. Here only. Any other medical equipments On that the rate will be 15%. General rate of plant and machinery will be applicable. That will be my general plant and machinery. Yes or no? But life-saving medical equipments, 40%. Remember this. They've asked this 1 or 2 times. That is why. Okay. Next one. Come to 15th one. 15th. Next page. 15th. Computer and computer softwares. See, computer softwares are intangible assets, but they will not be classified as intangibles. Computer softwares will be classified in the block of computers only. And computer has what rate? 40%. Including computer software, including computer software, and write down and all other computer accessories, all other accessories or peripherals, all other accessories or peripherals which are integral part of what? Computer system. Can you give me some examples? What is this? Mouse. Can I use it without computer? So this is an integral part of what? Computer system. What is this? Can I use it without computer? Integral part of computer system. Getting my point? UPS will be there, servers will be there, yes or no? Printers will be there. These are all peripherals, accessories, which are integral part of computer system. They cannot be used without computers, yes or no? They form part of the computer system only. So all those will be shown under one block, computers. Getting my point? And even the computer softwares will also be included over there. Tally software, AutoCAD, then that return making softwares are used in many CA firms and all. Getting my point? Some big designing firm is there. In those firm, different designing softwares will be used to design the products, to design the things. Yes or no? So these are all what? Computer softwares will be forming part of computer only. Next one, books. Any type of book. Block 16 or block 17. Merge both the blocks. Merge. Because ultimately these are books only. Any type of books, the rate will be 40%. But books and computer you cannot merge. Because both are different assets. Even though having same rate, but they are different assets. But books, all the books you can merge. Yes or no? Whether they are annual publication, whether used in libraries, etc. All the books are same only. And having what rate? 40%. So merge these two blocks and remember the rate for books also. Plant and machinery. If any plant and machinery which does not fall under the specific block above, then all such plant and machinery will fall under this general block, 15%. You have to remember this rate also. Will you remember? Ships, no need to remember, just read it once. So the points, the blocks where we have put a star mark, all those blocks are important. You have to remember the names also with the rate also. Sure, sir? Will you? So this is the end of depreciation, normal depreciation on what? WDV basis on the value of the block. By applying which rates? Rates prescribed in Appendix 1. These are Appendix 1 rates. These are not the only rates, huh? These are few relevant rates which they have kept in your ICI study mat. What ICI is writing, please check here. After this is over, no? Note. See this note. If you want to know the detailed classification of each of the block, then you have to go and read the rules. There is a detailed classification of all these things. This is not in the rules, you will not find them like this. You will find it differently. Getting my point? But we have to remember only this much. No need to put our brains too much into these petty things. Let's move ahead. Shall we? No. One more thing we will be doing, then we are going to solve the questions. One more thing. Additional depreciation. See, additional depreciation, this is a concept which is applicable when you don't follow 115 BSc. If you shift out of 115 BSc, we will allow you additional depreciation also. But if you don't shift out, you remain in the default tax regime, then additional depreciation will not be allowed. So you want to claim additional depreciation? Yes. Shift out. And when you shift out, you are eligible to get additional depreciation. But everyone will not get. Even if everyone shifts out, everyone will not get. The additional depreciation is given to those assessees who are engaged in manufacturing or power business. So any of these two business must be done. One, manufacturing business. Second, power business. So for these businesses, if you have acquired new plant and machinery, for these businesses, if you have acquired and installed new plant and machinery, did I say new asset? New plant and machinery. You have to acquire and install new plant and machinery in these businesses. Businesses means in the manufacturing, in the power generation, power distribution, power transmission. So whatever type of business you are doing, for that process only you are supposed to buy and you have to install in that process. Your plant and machinery must be used in the manufacturing. Your plant and machinery must be used to generate, to distribute, to transmit the power. In that activity only, it should be purchased and installed. Getting my point? Meaning that there are certain plant and machineries which you can buy in your business, but those plant and machinery will not be installed in that process. For example, ships and aircrafts. These are plant and machinery only. You can buy them for your business, but can you use them in manufacturing process? Can you use them in power generation, etc.? No. So in the main process only, you are not able to use them. We are not going to give you any additional depreciation on these plant and machineries. 6 plant and machineries are there. How many? 6. Number 1, ships and aircrafts. Because they are not going to be used in manufacturing. They are not going to be used in power generation, power distribution, power transmission, etc. So exclude them. On them, you are not going to get any additional depreciation. But sir, will I get normal depreciation? Yes, you can claim normal depreciation because they are used in your business. Yes or no? But since not used in your main activity, we are not going to allow you additional depreciation on them. Getting my point? Will you get normal? Yes. But will you get additional? No. Number 1, ships and aircrafts. Number 2, second-hand plant and machinery. What type of plant and machinery we told you to buy? New. That means when you will be installing this plant and machinery in your manufacturing process, in your power generation process, etc., you are the first person to use it. Before you, nobody has ever used it. So it cannot be second-hand, it has to be a new plant and machinery. So if you install second-hand plant and machinery, even if you are installing in the main process, manufacturing process, power generation process, still it will not be eligible for additional depreciation. But will you get normal depreciation on them? Yes. because they are used in your business. Hello, you are going to get normal depreciation, but forget about the additional. Additional will not be allowed because it is a second hand plant and machinery. Next one, you have acquired and installed any plant and machinery in residential accommodation, including guest house or office premises. In guest house, what manufacturing you are doing? In residential premises, what manufacturing process you are doing? In office premises, what manufacturing is happening? And if you have acquired any plant and machinery and you have installed them in residential accommodations, in guest house, in office, where your main manufacturing activity, power generation activity is not taking place in these places, yes or no? So even if those plant and machineries are new plant and machineries, but are these plant and machineries acquired and installed in your main process? No. Manufacturing process? No. Power generation, etc.? No. Then on them, you can claim normal depreciation, but additional we will not allow. Hello, sir. We want you to buy new plant and machinery which you are going to use for the first time, and you have to install that, you have to use that in power generation, in power distribution, in power transmission, or in your manufacturing process itself. And here these machineries are not fulfilling that criteria. Getting my point? Next one, if you, first of all, let me ask you one thing. One AC you bought, AC is a plant and machinery or not? General rate 15% is there. On that AC, you are going to get 15% normal depreciation. But will you get any additional depreciation on that AC? Come on, tell me. If you install that AC in office premises, you will not get. If you install that AC in the residential accommodation or guest house, you will not get. But if you install that AC in the factory, then you will get. Why? Because if it is installed in the factory, that means it is used in the manufacturing process. Hello, sir. Getting my point? So in factory, who installs AC in the factory? I install. In my factory, there is a machine which keeps on running continuously 24/7. But after it will be, once it will be used for such a long durations of time and it is continuously running, there will be heat which will be produced in that machine. So if the temperature of that machine is not maintained, that machine will break down. So I have to constantly supply cool air to that machine so that the temperature is maintained. If the temperature will increase, automatically this machine will break down. So what I have done? I have installed this machine in a small room in my factory, and in that room I have installed ACs. So that ACs are running, giving cool air. Because of that, the temperature of that machine is maintained. Is that AC installed in my factory? Yes. I will get normal also. I will get additional also. Getting my point, everyone? Next one. Office appliances, including computers. As the name suggests, appliances are what type of appliances? Office appliances, friends. So if office appliances are there, where are they going to be used? Office only. Where do I use computers? I use computers in the office only. And in the office, there is no manufacturing. Power generation, power distribution is happening. So on these office appliances also, I'm not going to get any additional depreciation. But I will get normal. Don't worry about that. But tell me one thing. If computer is acquired and installed in office, I will not get any additional depreciation. But if that same computer is acquired and installed in my factory with a machine, because I will give a command through the computer to the machine, only then the machine will start producing. Yes or no? If I will give the command through computer, then the machine will change the production or the machine will stop the production. Hello, sir. So to do my production activity, I was using a machine, and to run that machine, I had to give commands through what? Computer. So a computer is installed with that machine in the factory. Will I get additional depreciation on that computer? The answer is yes. Normal I will get, but additional also I will get. Getting my point? Next one is vehicles. Don't you think vehicles are not used in manufacturing anything? Hello? With vehicles you manufacture anything? Or vehicles are used for transporting the things from one place to another. So vehicles are used in my business for transportation of my employees. Vehicles are used in my business for my directors. Vehicles are used in my business to transport the goods from my factory to my warehouse. They are not directly used in the manufacturing process. Getting my point? So on those vehicles, I cannot claim additional depreciation. Rather, I will claim what? Normal depreciation. Everyone got it? But wait. There are certain vehicles which are used in the manufacturing process also. You know those small yellow color vehicles? Small, which are running inside the factory premises only, having forklift. They will pick up the goods from one process. They will bring the goods to another process. Now from there they will pick up the some goods and they will take to raw material picked up from the gate, brought in the production process, put in the production process. Now they will become fit for next process. So they will pick that material WIP from one process. They will take to another process. Then from there it will again bring the finished products to the gate so that it can be dispatched. Getting my point? So these small vehicles which are used inside the factory premises for movement of my goods, which are under manufacturing, yes or no? These vehicles are eligible for additional depreciation because they are used directly in the manufacturing process only. Getting my point? But other vehicles cannot be. Other vehicles means which vehicles, sir? The vehicles which are not used in the factory. Outside the factory they are used. So on them, will I be able to claim normal depreciation? Yes. But will I be able to claim additional depreciation? No. No additional depreciation. Last one. Please check. Last one. Any plant and machinery which is a new plant and machinery only, which is used in my manufacturing process only, which is directly used in my main process, but its entire cost is allowed as a deduction under any other section. See, after section 32, we are going to do section 35 also. We are going to do section 35 AD also. When we will be doing those sections, you will come to know that the assets which are acquired for scientific research in the business. So if I am doing some scientific research in that business, any asset which I acquire for scientific research, the entire cost of that asset is allowed as a deduction. So if the entire cost of that asset is allowed under section 35, that cost I cannot claim in the form of normal depreciation also. How the bloody hell that can be allowed as additional depreciation? Entire cost of that asset we have allowed, under section 35 or 35D. So there are other provisions in the Income Tax Act under your PGBP head, which will allow your entire cost of the asset, entire cost of your plant and machinery will be allowed as per that section. On those assets, we don't give you normal depreciation. Forget about additional. Normal, why we don't allow? Because entire cost you have claimed as deduction. Now, do we give you the same cost again in the form of depreciation? No. So, don't claim depreciation on them. Depreciation means normal also will not be allowed. Additional will also not be allowed. Even if they are what? New plant and machinery. But their cost is already allowed under any other provision, then those plant and machineries will also not be eligible for claim of any depreciation, including additional depreciation. Got it, sir? So, are you in the manufacturing business? Yes. Are you in the power business? Yes. For your manufacturing or power business, in this business only, you have acquired and installed in this business a new plant and machinery. Other than these 6. then whatever actual cost of that plant and machinery will be there, no? 20% of that you can claim in the first year itself in the form of additional depreciation. 20% of the actual cost of such plant and machinery will be allowed in the first year itself in the form of additional. Meaning in the first year, some amount of this cost will be allowed in the form of normal depreciation, and some extra amount out of that cost will be allowed additionally in the form of additional depreciation. My dear friends, this additional depreciation is nothing but the normal depreciation given extra in the first year. So the normal depreciation on this actual cost you were getting for the first year, yes or no? So along with that normal, claim 20% extra. If the normal was allowed 15, claim 20% extra. If the normal was allowed 40, claim 20% extra. If the normal was allowed 30, claim 20% extra. This is nothing but your normal depreciation given additionally. Getting my point? Hence it is known as what? Additional depreciation. Will you remember? Your normal depreciation will be taken as half for that plant and machinery which was purchased during the year and put to use for less than 180 days. Do you remember? Likewise, your additional depreciation will also be half. Not 20%, it will be 10% for that new plant and machinery which you have acquired and used for less than 180 days. But don't worry, the balance 10% of additional depreciation which you are not getting right now, no, you will get it in the immediately following year. Meaning that, sir, if the new plant and machinery is acquired and installed for the first time in my previous year, on that new plant and machinery, will I get normal depreciation? Yes. Will I get additional depreciation? Yes. So for the first year, that normal and additional depreciation both will be allowed at full rate. For the full year, it will be allowed at full rate if it was used for 180 days or more. Full rate normal depreciation, full rate means 20% additional depreciation. But if the new plant and machinery is acquired and in the year of acquisition, it is put to use for a period of less than 180 days. So on that new plant and machinery, whatever normal depreciation was available for the first year, will you calculate for full year? Yes. But will you calculate at full rate? No. It will be calculated at half rate. Likewise, the additional depreciation which is available for the first year, no, even that additional depreciation will not be allowed at full 20% rate. It will be applicable, it will be calculated at half rate, that is only 10%. But the remaining half depreciation, additional depreciation will be available in the immediately following year. Getting my point, everyone? Sure? Should I move ahead? Okay, sir. See. So, in which year the additional depreciation will be claimed? It can be claimed only in the first year. Please remember. The year in which the new plant and machinery is acquired, that first year only you can claim additional depreciation. And that additional depreciation will be calculated at 20% of the actual cost of that asset. But remember, in that first year, the additional depreciation which you are claiming at 20% rate, for that first year, it will become half rate, meaning it will become 10% only. If in that first year, it was used for less than 180 days, then the additional depreciation will not be taken at 20%, it will be taken at 10%. And the remaining 10% of the additional depreciation will be allowed in the immediately following previous year. Don't worry about that. You will not lose your 20%. You will be given full 20%. But this year 20% cannot be given. This year 10% we will give. Next year you take the balance 10%. Got it, sir? Sure. Now there is one CBDT circular. Read this circular. What this circular wants to tell you? Come on, tell me. If you are doing a business of printing or printing and publishing, so there is a circular giving the clarification that these businesses will also be treated as manufacturing only. So any new plant and machinery you have acquired for this business, no? Hello, sir. on those new plant and machinery, in this business also, you are going to get what? Additional depreciation. Because this business is treated as what? Manufacturing. So if you are not aware about this circular, and in the examination they will give you, Mr. Mohan is engaged in the business of printing or printing and publishing. Following are the details of his business incomes and business expenses. In the adjustment, they will tell you that Mohan has acquired new plant and machineries, new printers, etc. in his printing business. Hello? Calculate depreciation. What will you do? Come on, tell me. Will you calculate only normal or you will calculate additional also? You'll have to calculate additional also because Mohan's printing business as per CBDT circular is what? Manufacturing business. Got it, sir? Sure, everyone? Should we move ahead? We'll now start solving the questions. We are ready to solve the questions on depreciation, not PGBP question. In PGBP, depreciation will be just an adjustment. Okay. Or independent questions can also come for 4 to 6 marks. Or it can be asked as MCQ also, case study. So what type of questions can come? We'll see. Come on. Question number 1, illustration number 1. Mr. X, a proprietor engaged in what business? Manufacturing business. Furnishes the following particulars. Opening balance of plant and machinery as on 1st April 24 given. WDV as on 31st March 2024 after reducing depreciation for last year. Meaning that the depreciation for last year is already reduced. And after that, whatever WDV is remaining, no, end of the year, that is given. And that becomes the opening for the current year. Okay. New plant and machinery purchased and put to use on 8th June 24. Before my birthday, on my birthday or after my birthday? Before 4th October. So it will be greater than 180 days use. Okay. Now this was put to use on 15th December, meaning after my birthday. This will be less than 180 days. Okay. Computer acquired and installed in the office premises. Installed in the office premises after my birthday. Meaning that will you get normal depreciation on this computer? Yes. The normal will be half because it is put to use for less than 180 days. But additional depre you cannot get. See, on the new plant and machinery is bought now, you will get normal depreciation also, additional depreciation also. Normal depreciation also, additional depreciation also. But on this, normal depreciation you will get, additional depreciation you will not get. Getting my point? See, on this normal depreciation you will get half. On this normal depreciation you will get half. On this also normal depreciation you will get half. But on this you will get full. Getting my point, everyone? Sure. Now what they are saying, please check. Compute the amount of depreciation and additional depreciation if Mr. X has exercised the option of shifting out. Option of shifting out means 115 BAC not followed. Assume that all the assets were purchased by way of account paycheck. Do one thing. Highlight this thing. Assume that all the assets were purchased by way of account paycheck. Just highlight and keep it as it is. What is the meaning of this? You will come to know after some time when I will be explaining you actual cost. That time this information will be relevant. Okay. Now pay attention. How to solve this question? We are going to compute what? Depreciation. normal and additional depreciation for previous year 24-25 along with. See, they have not told me to calculate the closing WDV, but still here I will calculate it, because what if they ask you, how will you calculate it? Yes or no? That also we will learn in this question only. Okay. Along with WDV as on 31st March 2025. How many blocks are given in the question? Tell me. One block I already have of plant and machinery. From the last year only, it is coming in this year. And second block will be made for the first time in this year, computer block. So what I'll do, I'll make two blocks. Okay. One is computer depreciable at the rate of 40%, and second one is plant and machinery depreciable at the rate of 15%. Two blocks and particulars. Ready everyone? Do remember the format? Opening plus addition, less deletion. I will just make that format and I will start putting the amounts here. Okay. First I will make the format. First one is opening WDV as on 1st April 2024. In that I will add additions during previous year 24-25, and those additions are put to use during this year for greater than equal to 180 days, less than 180 days, and then I will reduce. So I will now get a balance amount, and from there I will less deletions during previous year 24-25. Those deletions I will reduce here, and now I will get the balance. On that balance I will calculate the normal depreciation. But wait, additional depreciation will not be calculated on the balance. Additional depreciation will be calculated on the actual cost, meaning the additions amount. Getting my point? Pay attention. Opening WDV for plant and machinery, it is given 30 lakhs. What should I write in computer? There was no opening. This block is made for the first time. Yes or no? Additions greater than equal to 180 days. How much? 20 lakhs. So 20 lakhs I will write here. Here there are no additions in the computer which are used for 180 days or more. Yes or no? Only one addition in the computer that is used for less than 180 days. So that was 3 lakhs. I will write down 3 lakhs here. And one addition in the plant and machinery also, which was used for less than 180 days, that is 8 lakhs. So can I say now the total is 58 lakhs over here, and here it is 3 lakhs. Are there any assets sold from any of the block in this year? No, na? Then dash dash. Okay. Now can I say the depreciable value as on the last day of the year is 58 lakhs and 3 lakhs. On this value only I have to calculate normal depreciation. So normal depreciation will be calculated on this amount. Now normal depreciation will be reduced out of this to get what? The closing WDV. Yes or no? So what I'll do? I will reduce the normal depreciation. So normal depreciation on what? On 8 lakhs out of 58 on 8 lakhs. Out of 58 on 8 lakhs, the normal depreciation will be at the rate of 15% into 1 by 2. And on the balance 50 lakhs, out of 58, on the balance 50 lakhs, it will be 15%. Are you all getting it, everyone? And on the 3 lakhs, computer, entire 3 lakhs, I will calculate at 40% into 1 by 2. Everyone understood this? So now the calculation part. 8 lakh into 15% divided by 2 will give me 60,000. So here I'll write 60,000. Okay, it will be dash. 50 lakh into 15%, it will be 7 lakh 50,000. Here I'll write 7 lakh 50. Here dash. Now here it will be dash. 3 lakh into 20%, it will be 60,000. Got it, everyone? So this will be my normal depreciation. Now along with the normal depreciation, I will get the additional depreciation on new plant and machinery because the business is manufacturing business. Yes or no? And I will say less. Additional depreciation on what? On 8 lakhs. It is a actual cost of new plant and machinery acquired during this year. But on this, I cannot claim the entire 20%. On this, I will claim only 10%. 20% into 1 by 2. And on the balance 20 lakhs. Sir, why not 50? 50 was the purchased in this year. 20 lakhs. Okay, actual cost of that only will be allowed as depreciation. Additional depreciation on that actual cost will be allowed at full 20% rate. Because this was put to use for 180 days or more. So 8 lakh into 10% will be 80,000. Here it will be dash. And 20 lakh into 20% will give me 4 lakhs. Here it will be dash. So now from 58 lakhs, I will reduce 60,000. I will reduce 7 lakh 50,000 minus 80,000 minus 4 lakh. I will get 45 lakh 10,000. This is the closing WDV as on 31st March 2025. And this will become opening in the next year. After reducing depreciation for this year, whatever remains will become opening in the next year. Yes or no? And from 3 lakh, if I'll reduce 60, I'll get 2 lakh 40. See, if they would have told you to calculate the closing WDV for this year, you would have calculated in this manner. But in the question, they are not telling you to calculate this. In the question, they are telling you to calculate the amount of normal depreciation and amount of additional depreciation. So what you are going to do here, normal depreciation is equal to 60,000 plus 7 lakh 50,000 plus 60,000. This is your normal depre. 60 plus 750 plus 60. 8,70,000. This is your normal debris. And what is your additional debris? Additional depreciation is 80,000 plus 4 lakhs. That will give you 4,80,000. If you get these two answers no, only then you will be getting the marks in the exam. Did you get everyone? Normal debris is 8,70,000 and additional debris is 4,80,000. Please check the answer. Same or different? Different, no? Same. This was your question number 1. You got the same answer, no? But by the way, perfect. Very good. Now, let's go to the question number 2. They have added both the depreciation, normal, additional together. Wow, very good. Whereas they are telling you to calculate normal separately and additional separately. See, and how they are giving the answers. We all got the same answers, friends. But we did what? This is normal, no? Hello, this is normal, no? And this is additional, no, friends? So add these for normal and add these for additional. Simple. Why are you adding normal and additional together? Normal and additional, no. Normal separate, additional separate. That's it. Got it? Sure. Come. Let's see now question number 2. Good question. Question number 2. Leave it as of now. Question number 2, we'll do it a little bit later. Okay, no? Question number 2 we'll do little bit later. We'll come to question number 3 first. Okay, this question. Now, a newly qualified chartered accountant, Mr. Dhaval, he is a chartered accountant doing a business or a profession. Forget about additional depreciation now. It will not come. Only normal debris. Additional depreciation can be claimed only by manufacturing assessees engaged in manufacturing or what? Or power business. A person who is involved in profession cannot claim and calculate what? Cannot calculate and claim additional depreciation. Yes or no, friends? Okay. So commenced the practice and has acquired the following asset in his office during financial year 24-25. Wait. When the practice is commenced? This year. And in this year, he is commencing the practice. So to commence this practice, he is bringing these assets. Meaning that there is no opening WDV. Dash. All the assets will be, all the blocks will be created for the first time in this year. Now, calculate the amount of depreciation. They are telling you to calculate the amount of depreciation. But what we will be doing? We will be calculating the closing WDV also. And in the end, we will give that breakup of how much is the depreciation. Yes or no? Just the way in which we did in the last question. Same to same thing we are supposed to do here. But here no, they have tricked you. They have given you the purchase dates also. They have given you the dates on which the assets are put to use. So which date is relevant for you to see that whether the asset is used for 180 days or less, or 180 less than 180 days or 180 days or more. The date when the asset is put to use. These dates are important for you. Now you have to see that if the asset is purchased in this year and put to use for less than 180 days, then on that asset, how much depreciation you will get? You will get half. And if it is put to use for 180 days or more, you will get full. That's it. Got it? No? Pay attention. Now, underline this part. Just like in the last question, the same sentence was given. In this question also, the same sentence is given. What is the meaning of the sentence? We'll go and we'll check. Okay. Next one. Computer. There will be a block of computer which will be made now. including computer software. Cost is 35. Date of acquisition 27 September, meaning in my previous year it is acquired. And it is put to use in my previous year only, but on 1st October, meaning before my birthday it is put to use. Put to use for 180 days or more. So can I say this is greater than 180 days? Computer UPS put to use on 8th October, meaning less than 180 days. Computer printer 1st October, greater than 180 days. All the computer related items will be in the single block. Now books, there will be a separate block of books also. Okay, books other than annual publication, they are put to use on 1st April 2024. 1st April they are bought, 1st April they are put to use also. Greater than 180 days. Office furniture, another block will be made. And office furniture greater than 180 days because it was put to use on 1st April. Laptop, I will bring this laptop in the block of computers, yes or no? And laptop was put to use for less than 180 days. 8th October, can you see? Very simple question, very simple. What I do, pay attention. Can you see this format? My favorite hobby. You all must be knowing what I am going to do now. Favorite hobby, copy and paste. Oh, no need to delete. Why I am deleting it? Sir. Now how many blocks should I prepare? 3, no? One for computer, second one for furniture, and the last one for book. Okay. So 4 blocks will be 3 blocks. Computers I will make first. Last one will be furniture. Furniture, what is the rate? 10%, no? Furniture 10%. Then books at the rate of 40%. Then computer at the rate of 40%. I just have to pick up the values and fill in the blanks. Yes or no? Come on, tell me. Opening. For all, there is no opening. Purchased and put to use for 180 days or more. 180 days or more. So 35,000 plus 12,500. This wait. Pay attention here. Can I say this 35 and this 12,500 is more than 180 days. So 35 plus 12,500 will be 47,500. Okay, no? So that 47,500 I will write here. Now check the books. Books 13,000 greater than 180 days. So 13,000 I will write here. Tell me furniture. Furniture also more than 180 days. 3 lakhs. 3 lakhs here. Now less than 180 days. Come on, tell me less than 180 days. Computer UPS? Yes. 8,500. And laptop 43,000. Getting my point? 8,500 plus 43,000 will give me 51,500. Any books for less than 180 days? No. Any furniture for less than 180 days? No. Dash, dash. Getting it or not? What is happening? Sure, no? Perfect. So now you can do the total. 51,500 plus 47,500 will give you 99,000. So I will write down 99,000 over here. Here it will be 13,000. and here it will be 3 lakhs. Any deletions happening from the block? No, no, no. No deletions. So it will be 99,000, it will be 13,000 and it will be 3 lakhs. Okay. Now this is the value at the end of the year of all those assets which are there in the block. Okay. Now on this value only I will now calculate the depreciation. Now I will calculate only normal depreciation less normal depreciation on entire 99,000 I cannot calculate. On 51,500 out of 99 on 51,500 I will have to calculate at the rate of 40%, no, half of that. And on the balance 47,500 I will calculate at the rate of full 40%. On 13,000 books I will calculate full 40%. On 3 lakh of furniture I will calculate full 10%. Done, no sir? That's it. Now calculation. 51,500 into 20% will give me 10,300. 10,300 dash dash 47,500 into 40% will give me 19,000 dash dash 13,000 into 40% will give me 5,200. 5,200 dash dash, and on 3 lakh it is 10%. Oh, how many zeros I have put? 1 0 extra I had put, no? Here it will be dash, here it will be dash, here will be 30,000. Done, sir. So 99,000 minus 19,000 minus 10,300 will give you 69,700, and 13,000 minus 5,200 will give you 7,800, and here you will get 2,70,000. This is what? Closing WDV as on 31st March 2025. Got it, sir? Very difficult question. Very difficult. Now, therefore, normal depreciation will be 10,300 plus 19,000 plus 5,200 plus 30,000. So 10,300 plus 19,000 plus 5,200 plus 30,000 will give you 64,500. Check the final answer. Getting the same amount. Easy, difficult, very difficult. 64,500. Sir, it is 34,500. How come, sir? 34,500 plus 30,000 will give you 64,500. What they have done, you know? These mad people have calculated the depreciation for books also along with computer. And they themselves will not give you the marks for this, huh? See, in your study mat only, they have committed such kind of big error. And when you will do in the exam, no, they will cut your marks. They will say, no, books are different asset, computer different asset. What if both have same rate? You have to prepare separate block. So let them do whatever they want. Okay, no. We are going to do the correct thing. We have already calculated 3 blocks. 3 blocks. Book separately, computer separately and furniture separately. Okay. Should I move ahead? Next one. Question number 4. Okay. Mr. Gama, a proprietor, started a business of manufacture. Started a business of manufacture of tires and tubes for motor vehicles on 1st of January 24. See, the business was started last year in January. The manufacturing unit was set up in this year, 1st May 2024. I don't have to see when the business was started. I have to see when the unit was set up. It is set up in this year. So when the unit is set up, that time only the assets will be brought, no? And the unit commenced operations from 1st of June 2024. So this is the first year in which the operations are commenced. This is the first year in which the operations are commenced, even though the business started last year. But this is the year in which the operations are commenced, meaning that whatever assets are bought, the block will be created for the first time in this year only. Getting my point? Now next, the total cost of plant and machinery installed in the unit is 120 CR. Meaning 120 crores worth of plant and machinery you have installed in this manufacturing plant. The said plant and machinery included second-hand plant and machinery bought for 20 crores. Second-hand is there. Second-hand plant and machinery used for business only, no? You are going to get normal, but additional depreciation will not be available. Getting my point? And new plant and machinery for scientific research acquired at a cost of 15. See, if you acquire any machinery for scientific research, no, on that the entire cost is available under section 35. Entire cost will be allowed there only. So for a plant and machinery whose cost is already allowed as a deduction under any other section, will you get any depreciation on that? No. Forget about normal depreciation. How will you get additional also? So no normal, no additional on this 15 lakhs. Hello, sir. Will you get normal on second hand? Yes, but you will not get additional on second hand. But on the balance, no. On the entire balance plant and machinery, you will get normal also, you will get additional also. This is so easy. Very easy question. If this type of question will come in the exam, no, it will be coming as a case study. 2 marks MCQ. Okay. Or it will be coming as a adjustment in the main question. Okay. Pay attention. Compute the amount of depreciation allowable under section 32. See how bad these people are. They have not given you any hint. Depreciation allowable under section 32. So only normal depreciation is allowable under 32 or additional is also allowable. Yes. So they are indirectly telling you to calculate normal as well as additional because both the depreciation is allowable under section 32 only. Getting my point? Next one. Assume that this is the standard line which they have used in the earlier two questions also. Highlighted there also. I have highlighted here also. Okay. Now you are shifting out of the default tax regime, meaning not following 115 BSE. What if you follow 115 BSE? Will you get normal depre? Yes. Normal is not denied, but you will not get any additional depreciation. So in the first question where we took the additional depreciation, why we took the additional depreciation? There also he was shifting out. If in that question they tell you that the assessee is not shifting out, he remains in 115 BSE, then in the first question you will calculate additional. No, you will not calculate additional, you will calculate only normal. Here also you will calculate additional, normal both because you are shifting out. If they are telling you that you are not shifting out, then you will calculate only normal. Please don't calculate additional. Okay, everyone, pay attention now. How will you solve this question? This way, this way, this way also you can solve. But I will tell you a new way in which you can solve the question. Okay, see, total investment in plant and machinery 120 CR. I will bifurcate this into three parts. First, I will write down 85 CR. Then I will write 20 CR. then I will write 15 CR. This is new plant and machinery used in manufacturing. This is second hand plant and machinery which is used in manufacturing only. This is plant and machinery used in business. Used in business for scientific research. Okay. This cost will be fully allowed under section 35. So on this, you are not going to get any additional depreciation. You are not going to get any normal depreciation. But on 20 and 85, you are going to calculate depreciation. Okay. So can I say normal depreciation? If nothing is mentioned on plant and machinery, I will take general rate. Okay, no? And additional depreciation, the rate is what? 20%. So this time the normal depre as well as additional depre will be calculated on the same amount because actual cost will be WDV only. Getting my point? So normal depre on 85 crores. 85 into 15% will give me 12.75 CR. Please be very careful, huh? Don't round off. Don't make it 12.8 because the amounts are in crores. So the difference will be directly of 50,000. Getting my point? So don't round off like this. Now additional depre 85 into 20% will be 17 CR. On this I will get both the depreciations, no? Now what about second hand? I will not get any additional depreciation. On this I am not going to get normal and I am not going to get additional also. Okay. But on 20 CR I will get 15%. That is 3 CR. Got it, everyone? So 12.75 and 3. And plant and machinery used for scientific research. Why I have not taken any depreciation on that? Since entire actual cost, that is 15 crore, is already allowed under section 35. It is already allowed under 35. So on that, no normal, no additional, entire we have allowed only, no? Now tell me. How much is this and how much is this? Total depreciation. Total depre 12.75 plus 17 will give me 29.75 CR. And here it will be 3 crore. Getting my point? Total debris. Or what I can do, instead of totaling here, wait, don't do it. Instead of totaling here, I will do total normal depreciation, which will be 12.75 plus 3 CR will be 15.75 CR, and total additional depreciation will be only 17 CR. These two amounts. Very difficult, no, sir? Very difficult. And add both of them. You will get total depreciation under section 32. Got it? So therefore, total depreciation under section 32 is 32.75 CR. This is my final answer. Can you please check the answer? Same, sir, or different, sir? Yo, same. Till illustration 4 we have covered. Now come to test your knowledge. Test your knowledge. Let's test your knowledge. In test your knowledge, come to question number 1. Mark this question important. Mark this question important. Mr. Venus engaged in manufacture of pesticides furnishes the following particulars relating to its manufacturing unit at Chennai for the year ended 31st March 2025. Okay. Plant and machinery WDV is given 30 lakhs. So this was WDV as on the last day of last year. And they are not saying that from this WDV the depreciation was reduced. And depreciation also for the last year they have given separately. Meaning that after reducing depreciation from the last year's WDV, whatever WDV remains will become opening in my previous year. Yes or no? So what will be the WDV? Come on, 30 minus 4.75 will be 25.5 lakhs, 25.25. This is the closing WDV after depreciation for the last year will become opening in this year for plant and machinery. Yes or no? Now in that same block, 2 new plant and machineries are acquired. One before my birthday and one after my birthday. This is greater than 180 and this is less than 180. Computer purchased after my birthday, less than 180. But for this, a new block will be created. There is no opening, but the new block will be created. Now tell me, on plant and machinery, you will get normal additional both. If you shift out of 115 BSE, yes or no? But if you don't shift out of 115 BSE, on plant and machinery, you will get only normal, you will not get any additional. And computer anyways, under both the regimes, 115 BSE or no 115 BSE, computer you are not going to get any additional depreciation. Yes or no? Now they are saying that all the assets were purchased by account pay check. We will highlight this. Later on, we will see what is to be done with this. Okay, no? All the assets were put to use immediately. That is what we have also assumed. That date of purchase is given. If nothing is mentioned that when the assets were put to use, we are assuming as on that same date the asset is put to use. Hence we have already written greater than 180, less than 180, yes or no. Next one. New machinery purchased on 1st of December 2024 and computer have been installed in office. Wow, wonderful. This as well as this, both are installed in office, meaning that, sir, here no, normal depri will come, additional depri will not come. Here also, normal depri will come, additional depri will not come. If I don't follow 115 BSE, shift out of 115 BSE, then on this Normal debris will also come. Additional debris will also come. But on the opening, no, opening only normal will be calculated. Because that is not the machinery which is purchased in this year. It is already purchased. But see, now this information becomes very important. This information is also important and this information is also important. During the year ended 31st March 2024, meaning last year, a new machinery had been purchased on 31st October 23, meaning that last year a machinery was purchased after my birthday. On that, last year you would have claimed additional depreciation, but only half was allowed. So on that, half will be allowed in this year, no? See, if any new plant and machinery acquired and installed in the first year, it was put to use for less than 180 days, on that additional depreciation becomes half. Remaining additional 10% will be allowed in the next year, no? So this year, purchased and put to use for less than 180 days. Half you will claim in this year. Half you will claim in the next year, no? Likewise, for the last year, half you had claimed in that year, half additional depreciation you will claim in this year, no? Hello, sir. So when you will be calculating additional depreciation, no? Additional depreciation on the new plant and machinery acquired in this year will also be calculated, and additional depreciation half amount which you could not claim in the last year will also be claimed in this year. Yes or no? And the cost of that machine was 10 lakh. Additional depreciation besides normal depreciation had been claimed thereon. Meaning last year on this machinery, additional was also claimed, normal was also claimed. But both were claimed half. Half of the additional depreciation on this machinery will be claimed in this year. Okay, important. See, this type of question, this kind of mischiefs they will do in the exam. Next one, depreciation rate for machinery may be taken at 15%. This is the normal rate of depreciation which they have given. Assessee has no brought forward business loss or unabsorbed depreciation. This information is not relevant for us right now. Compute the depreciation available to the assessee as per the provisions of the Income Tax Act and the WDV of the different blocks. See, now they are telling you to calculate the WDV also and the WDV. If he exercises the option of shifting out, meaning 115 BAC not followed, and if he does not opt out, means 115 BAC followed. Okay, now how to solve this question? Shall we start? Okay, pay attention. My favorite work. Sorry, I forgot. My favorite work. Copy and then paste. And the first assumption is the assessee is not following 115 BAC. We are assuming that he is not following 115 BAC and we are making this calculation. Okay. Now, how many blocks? 2 blocks only, no? Plant and machinery and computer. So, plant and machinery at the rate of 15% and computer at the rate of 40%. Let's start. What was the opening? 25.25. Plant and machinery. We have already calculated. Yes or no? All the rupees are in lakhs. So if you try to round off, the difference will be in few thousand or few hundreds. Getting my point? So don't round off. Write down the full. At least 3 or 4 decimal points. Yes or no? Computer will be dash. Additions happened? Yes. What additions happened? Let's check. 10, 8 and 4. Here I will write 10, Here I will write 8 and here I will write 4. Any problems till here? No problem, sir. Very good. So 25.25 plus 18 will give me 43.25 here. And here it will be 4. No deletion, sir. So the depreciable value will be 43.25 and here it will be 4. Now I will less normal depreciation on entire 43.25, no, on 8 lakhs at the rate of 15% into 1 by 2, and on balance 43 minus 8 will be 35.25 lakhs at the rate of 15%. Everyone understood this much? Out of 43.25 on 8 lakhs I will calculate half, but on the balance amount I will calculate full, and on the entire 4 lakhs of computer I will calculate 40%, no, half of that, because entire is less than 180 days. Got it? So 8 into 15% divided by 2 will give me 0.6 lakhs. Here it will be 35.25 into 15%, that will be 5.2875. 5.2875 lakhs. Okay. And on 4 lakhs, it will be 20%. 4 into 20% will be 0.8. 0.8 lakhs. Now less additional depreciation on 10 lakhs. Which 10 lakhs, sir? Sir, this 10 lakhs. This 10 lakhs I am talking. Color, green color. The plant and machinery which is purchased in this year and put to use for 180 days or more. On that additional depreciation will come, and that will come at the rate of 20%. And this is for previous year 24-25. And one more 10 lakh. Cost of one more plant and machinery was 10 lakh, which was purchased in last year, meaning previous year 23-24. On that you claimed half in the last year, half you will claim in this year. This is very, very, very important, this part. Okay. Now tell me. Here it will be dash, here it will be dash. Here it will be 2 lakhs and here it will be 1 lakh. Got it, sir? Next one. So tell me what to do now. What to do? I will calculate the WDV of the block now. So 43.25 minus 0.6 minus 5.2875 minus 2 minus 1. It will give me 34.3625. 34.3625 lakhs. And here it will be 3.2 lakhs. This is the closing WDV as on 31st March 2025. Yes or no? Sure. Now what to do? Normal depre. Normal depreciation is 0.6 plus 5.2875 plus 0.8. So 5.2875 plus 0.6 plus 0.8 will give me 6.6875, and additional depreciation will be 2 lakh plus 1 lakh, that will be 3 lakhs. 3 lakhs and 6.6875. Therefore, total depreciation will be 6.6875 plus 3 will give me 9.6875 lakhs. Check the answer. They have mixed everything. First of all, the answer will not be understood also. Amounts are these only. But few amounts, the way in which I have presented and the way which is presented there is different. Check the final answer. This is the value on which the depreciation needs to be calculated. On this, I have calculated normal. And additional is to be calculated on what? On actual cost. But actual cost of all will not be used. Why? Because the new plant and machinery which is bought for 8 lakhs and the computer are installed in office. On that, additional will not come. Additional will come on only 10 lakhs. Yes or no? And the additional will come on the balance, the earlier 10 lakhs also. So additional is calculated on 10 and 10. On the last year's 10 lakh, I have calculated half because half is already claimed in last year. But 10 lakh which I have acquired in this year and put to use for 180 days or more, on that full additional depreciation 20% will be allowed. Now, normal as well as additional depreciation both are to be reduced to calculate your closing WDV. So I have reduced both and I have calculated my closing WDV. How much was normal in this year? Normal was 0.6, 5.2875 plus 0.8. How much was additional which I am going to claim in this year? 2 plus 1, 3. And how much is the total depreciation? Normal plus additional is my total. That's it. Got it now? Now, pay attention. Pay attention. Same stuff. Copy. Copy. And the next page. Paste. What I will write here, Now this time 115 BSc followed. Everything remains same. Everything remains same. This also remains same. Normal depre also remains same. Only this additional depre will not come. Not even for this year, not even for last year. Getting my point? So this additional depre will now become 0. This will become 0. I will not write additional depreciation only. But I will write down a note that why I have not taken additional depreciation. Because the SSC is following 115 BSc. That's it. Got it? So the closing WDV will change. That's it. Calculate the amounts. 43.25 minus 0.6 minus 5.2875. 5.2875 will be 37.3625. 37.3625. Did you see? 3 lakh increased. Why that 3 lakh? Additional depreciation was not claimed. And here it will remain same. 3.2 lakhs. And the normal depreciation will be how much? Same, no? 0.6 plus 5.2875 plus 0.8. That will be same only, which was last time. How much? 6.6875. 6.6875. And this is your total depreciation also, because no additional depreciation is there. So normal is also this much, and total depreciation is also this much. Please check the answers. They would have done 6.69. Instead of 6.6875, they would have done 6.69. Instead of 37.36, they would have done 3625, they would have done 36.36. Here they would have done 9.69. Here it would be 9.69. Rounded off. We have written the full things. Got it, everyone? Sure? Very good. Next question. 2. Mr. Abhimanyu is engaged in business of generation and distribution of electric power. The business is power business. He opts to claim depreciation on WDV for income tax purposes. Meaning that, do you remember? Assessee engaged in power business can also claim depreciation on WDV basis. If this option was taken in the first year, then in the first year and in all the subsequent years, the depreciation will be available. The depreciation will be available on WDV basis. So this assessee has already opted for WDV basis. So even if the business is power business, we are not going to calculate depreciation on SLM basis. We are going to calculate depreciation on WDV basis only. Okay, on the value of the block. Next one, for the from the following details, compute the depreciation allowable. As per the provisions of the Income Tax Act 1961 for the assessment year 25-26, assuming he has exercised the option of shifting out, 115 BSc not followed. Now, WDV of the block as on 31st March 2024, WDV given 50. So this was the WDV as on the last day of the last previous year. And depreciation for the last previous year also given, meaning that this depreciation has to be reduced. Then we will get the depreciation, then we will get the WDV as on the last day of the last previous year after depre, which will become opening in this year. So can I say, here it will be 42.5. This will become opening in my previous year. Okay. New machinery purchased 12th October 2024, less than 180 days. On that, normal will also be available and additional will also be available. Why? Why, sir? Because if it is already included in WDV, they will not be giving this separately. Depreciation separately given for last year, no? Meaning that they have not reduced. So we have to reduce, and then WDV for the last year will be there, which will be opening for our previous year. If they will directly give you WDV, no depreciation for last year given, meaning that depreciation already reduced. Getting my point? In one question we saw that also. But if they are deliberately giving separately the depreciation also for last year and WDV also for last year, that means they want us to reduce that depreciation. After depreciation, whatever WDV was there, that we are going to take as opening. Getting my point? Okay. Next one. See, machinery imported from Colombo on 12th April 24, meaning that this machinery was used for more than 180 days. But this machinery has been used only in Colombo earlier, and assessee is the first user in India. See, this is a second-hand machinery. Even if you are the first user in India, but earlier it was used by someone else, no? So you are not bringing this in your power generation business for the first time and using for the first time. Getting my point? The machine was already used earlier. So what? It was used outside India, but it was used only, no? So this is a second-hand plant and machinery. On that, normal will be available because it is used in your business. but additional depreciation will not be available. Yes or no? Next one, this new computer installed in generation wing. Important. Power generation. In that power generation wing, this computer was installed, meaning that the computer is used in the main business. On that computer, normal will also be available, additional will also be available. Got it, everyone? And it was acquired on 15th of July, meaning before my birthday. More than 180 days. Now, based on this information, you are supposed to compute what? Depreciation. Very easy question. But mark this question also important. Okay. Now, these two questions, they have not given in illustration. They have given in test your knowledge. If you don't solve all these questions and you go in the exams, these type of questions only they are asking. Come on, let's start. Shall I start now? Now, what is the opening WDU of the plant and machinery? It was 42.5. So I will write down 42.5. Computer, no opening because it was purchased for the first time in this year. Now, new plant and machinery less than 180. It was 10 lakhs. It was 10 lakhs. And more than 180 days, it was 9 lakhs. It was 9 lakhs. Computer, it was for less than 180 days, it is 2 lakhs. Computer is 2 lakhs. And here it will be dash. Now, total. So, 42.5 plus 19 will give me 61.5. And here it will be 2. Okay. Now pay attention. No deletions during the year. So the value will be 61.5 and 2. On this, now I will calculate normal depreciation. Normal depreciation on entire 61.5 at 15%? No. Out of that, on 10 lakhs at half rate. So it will be 10 lakh into 7.5% will be 0.75. Done. Here it will be dash. On 51.5 lakhs. Now it will be full 15% rate. So 51.5 into 15% will give me 7.725. Here it will be dash. And on 2 lakhs, WDV of the computer final at the rate of 40%, but this will also become half. So on 2 lakh at the rate of 20% will be 0.4 lakhs. Are you getting these amounts? Sure. Kaushik. Perfect. Now less. See, additional depreciation I will get on all the new asset. New plant and machinery also and new computer also. Why? Because computer is used in power generation unit. Yes or no? So what was the cost? 9 lakh, 10 lakh and 2 lakhs. On all of them I can claim. But no, the second hand plant and machinery was there. On that I cannot claim additional depreciation. So how much was the value of second hand plant and machinery? It was 9 lakhs. On this 9 lakh I cannot claim. Okay, no. So additional depreciation on 10 lakhs will be at the rate of 20%. No, it will be half because this was used for less than 180 days. And on 2 lakh rupees of computer, it will be at 20%. No, this will also become half because computer was also used for less than 180 days. Okay, no. So 10 lakh into 10% will be 1 lakh and 2 lakh into 10% will be 0.2. Getting it, everyone? Sure, no? So here it is dash, here it is dash. Now tell me, 61.5 minus 0.75 minus 7.725 minus 1 will give me 52.025 and 2 minus 0.6 will give me 1.4 lakhs. This is my closing WDV as on 31st March 2025. Okay, therefore my normal depreciation in this case total is 0.75 plus 7.725 plus 0.4 and additional depreciation. Wait, first let me total this. 0.75 plus 7.725 plus 0.4 will be 8.875 lakhs and additional depreciation will be 1 plus 0.2 will be 1.2 lakhs and total depreciation will be total of these two. Yes or no? So can you calculate the total of these two? Will be 10.075 lakhs. This is the total depreciation including normal and additional. Computer is greater than 180 days or what? Computer is greater than 180 days. Yes. My mistake in computer. So computer here I will take only 40%. So this will be 0.8. My mistake happened. This is 0.8. And here also on computer I will take full 20%. So this will become 0.4. So this will also change. This will also change. And this will also change. My mistake, guys. My mistake. Okay. So now what was the final amount? 2 minus 1.2 will be 0.8 lakhs, no? Here it will be 0.8 lakhs. Now it is okay, no? So this will be 0.8. I will add here. So 0.75 plus 7.725 plus 0.8 will be 9.275 lakhs. And this 0.2, no, this will be 0.4. So it will be 1.4 lakhs. Plus 1.4 lakhs will give me 10.675 lakhs. 10.675 lakhs. Now it is okay. Correct, no? Very good. See, even I can commit mistakes like this. So the more practice you will do, the more chances that these type of silly mistakes will be less. Okay. So I hope that the depreciation concept, you are comfortable with it now. Okay. Two very important questions we have solved. 1 and 2 in test your knowledge. Okay. Now the balance part of discussion for the depreciation that we are going to do now. Please pay attention. See, whenever you talk about normal depreciation under 3211 or normal depreciation under 3212, or you talk about additional depreciation under 3212A, everywhere no, the actual cost of the asset is very important. What did I say? Actual cost of the asset is very important, because see, when you calculate the depreciation on SLM, that depreciation is allowed on the actual cost of individual asset. So on the actual cost of individual asset, this depreciation is allowed. When you come to 3212 block system, depreciation is allowed on the value of the block, but that value is ultimately actual cost of all the assets which are there in the block. Yes or no? Actual cost of all the assets which are there in the block is nothing but what? Value of the block. So to determine that value of the block also, you need to take actual cost of all the assets which are there in that block. 20% of the actual cost of new plant and machinery is available as additional depreciation. So to claim the additional depreciation also, you need the actual cost of the new plant and machinery. Actual cost. And in some cases, in some cases, like section 35 is there, section 35 AD is there. In these sections, the entire amount of actual cost of the asset is allowed as a deduction. You are not supposed to claim that cost in the form of depreciation. Rather, that actual cost is allowed fully under those sections. So there also, the actual cost of the asset becomes very important. Now just imagine, if they are not telling you anything about the actual cost, that what amount will be actual cost and what amount you cannot take as actual cost, you will take the actual cost to the maximum amount possible. You will try to add all the things in the actual cost, so that the higher amount of actual cost will come and you will be able to claim more deduction. Or the department can try to suppress it or reduce that amount as much as they can, so that they don't have to give you the more amount of deduction. So it becomes very important for the law only to tell you that how much should be the actual cost which you should take depreciation on, which you can claim as a deduction under section 35, 35 AD, etc. How much should be the actual cost which the department will also take? The amount which you are going to take, that same amount they will also have to take. But how much you will take, how much they will take, you all not don't decide that. We will tell you. The law will tell you that what should be the actual cost for this purpose. So there is one section, section 43(1), that defines actual cost. Whatever is the asset which is used for the purpose of your business or profession, what will be the actual cost of that asset for the purpose of PGBP head? See, this definition which we are going to see right now is applicable only for the purpose of PGBP head. That is the reason why they have defined in this head only. 43(1). If the definition would have been given in section number 2, then that definition would have been applied to entire Income Tax Act everywhere. But this definition is given only for the purpose of PGBP head. Whenever you will try to claim the actual cost under the head PGBP, either in the form of depreciation or fully, will not make any difference. Hello, that actual cost will be the amount which is defined in section 43(1). Okay. Now, what is the definition of actual cost? Please check. Actual cost means the actual cost of the asset to the assessee. This is the real definition. Actual cost means the actual cost of the asset to the assessee, but it shall not include that cost which is borne by any person, any other person, authority or government. Now, what do you understand by this? I will give you one example. You will understand this fully. See, for my business, I acquired one asset. The cost of that asset, actual cost of that asset was 50 lakh rupees. So is it my actual cost? No. This is the actual cost of the asset. They are saying that whatever actual cost the assessee will take, whatever actual cost will that the assessee will take, will be that actual cost of the asset which is to the assessee. Actual cost of the asset to the assessee. You are not supposed to take the actual cost of the asset. No, 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 no. You are supposed to take the actual cost of the asset to the assessee. Meaning that 50 lakh was the cost. And to some part of this cost was met by the government. Possible. You were given some subsidy. And as a result of that, the government, they met 20 lakh cost out of this 50 lakhs. So you had to spend 50, but 20 lakh came back to you, in the form of subsidy, in the form of assistance from the government. So how much is the actual cost of the asset? 50 only. But for you, how much it is? It is 30 only. Actual cost of the asset to the assessee. Got it? If you have not spent 50, why are you claiming 50? How much you have spent? Only 30, no? So claim 30 only. Because that is the actual cost of the asset to the assessee. Got it, sir? But what all things will be included in that actual cost, that 50 lakhs asset? What all things will be included? Number one, the main purchase price of that asset. Do you know that asset whose cost you are saying it is 50 lakhs? No. The purchase price of that asset was only 45 lakhs. Then why are you taking 50 lakhs? Because there are some things which are added in this price. See, if you are buying an asset from some vendor, he is selling you that asset for 45 lakhs. But that asset will be loaded, it will be unloaded, it will be installed. Hello? Installation charges, loading and unloading charges, transportation charges, transit insurance charges, all the costs which are incurred till the time your asset is not ready for its intended use. All the costs are known as capital costs, to be capitalized, to be added to the cost. For example, 45 lakhs you paid to the vendor. Now 5 lakh rupees extra you are incurring on these type of expenses. So if someone asks you that this asset costed you how much, will you say 45 lakhs or you will say 50 lakhs? Definitely. Because those expenses which you are incurring, those expenses are incurred with regard to this asset only, no? To bring that asset to its working condition, to bring that asset to a condition where you can say now it is ready for its intended use. Yes or no? So till that time, whatever cost which you incur on the asset, that forms part of the actual cost. Even sometimes you take a loan, no, to buy the asset. So the interest on that loan also is capitalized, is added to the cost. From the date of borrowing till the date when the asset is put to use, actually put to use, till that time, whatever interest on the loan which you have paid, no, even that is to be capitalized. Any interest after the asset is put to use is not capitalized. But from the date when the loan was taken, from that date till the date on which the asset was put to use, till that date, whatever interest on that loan which you have taken to acquire the asset, that entire interest will also be added to the cost. So now, purchase price of the asset, will it form part of actual cost? The answer is yes. Second, loading charges, unloading charges, transportation charges, insurance charges, freight charges, transportation charges, everything, installation and erection charges, all those costs, all those expenses which you have incurred on the asset to bring that asset to a condition when it is ready for its intended use in your business. All those expenses and costs will be added to that purchase price, because this will also form cost of the asset. These are capital costs. Also, the interest on loan taken to acquire the asset will also be added, will also be capitalized. Till that date, the asset is actually put to use. Whatever interest on that loan is there, that also will be added. Now, if you add all those things, no, it comes to 50 lakhs. It comes to 52 lakhs. Example, it comes to 52 lakhs. Now, when you purchase that asset from the vendor, no, so vendor told you that the asset is 45 lakhs. What is the purchase price? 45 lakhs. That 45 lakhs also includes what? That 45 lakhs also includes 2 lakh rupees of GST, for which you are going to get what? ITC. Do you remember input tax credit you get? So in that 45 lakhs, what was the purchase price of the asset? 2 lakh was the tax, which is allowed later on to you in the form of what? ITC. That tax anyways you are going to get as what? ITC. Why are you making it as a cost of your asset? Remove. So out of 52, 2 lakh, which was the taxes which you paid at the time of purchase of the asset, for which you are going to get what? ITC. Senvat credit, reduce that. How much remaining now? 50. So that 50 lakh is the actual cost of the asset. Now out of that, how much the government met? 20 lakhs. Reduce that. So how much is the actual cost of the asset to you now? It is 30 lakhs. Got it, everyone? So whenever you will acquire, what did I say? Whenever you will acquire the asset, spending the money from your pocket to acquire the asset. Getting my point? That time, how you will determine this actual cost? See, explanation number 8, 9 and 10. What did I say? Explanation number 8, 9 and 10 of section 43.1. Section 43.1 will tell you what is actual cost. Usually this amount is actual cost. What is defined in 43.1. But under section 43.1 there are explanations. Explanation 1 to explanation 13. Under these explanations, no, under these explanation, some special situations are given. If you are using your asset in the business, hello, and that asset is covered under these special situations, then under these special situations, what actual cost you will take, those things are given in explanation 1 to 13. Getting my point? So explanation number 1 is there, explanation number 2 is there, 3 is there, 4, 4a, 5, likewise till 13, explanation 13. These many situations are there. Under all these situations, if you are bringing an asset in your business and if your asset is falling under these situations, you cannot take the actual cost as it is defined. No, 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 no. We are explaining you are supposed to take this amount as actual cost. Getting my point? So explanation number 1 is there. That I am not going to explain right now. Why? Because with section 35, what did I say? With section 35, I will discuss that explanation number 1. Explanation number 2, I will discuss right now. Explanation number 3, 4, 4a and all, those are there in your final CA syllabus. Final CA, those are relevant. Right now, we are not going to discuss them. In your exams also, they don't ask you this much difficult concepts. Don't worry about that. Explanation number 2, I will discuss right now. 3, 4 and all, we'll leave. Then we'll directly come to explanation number 5. Then after that, whatever explanations are there, no, we will ignore. We will directly come to 8, 9, 10, which I have already explained. 8, 9, 10. I have already explained. I have combined all of them and I have explained this. Friends, pay attention. Explanation 8, 9, 10. Assets used in business. Did you acquire them? Did you acquire them? Spending money and brought the asset in your business? Yes or no? So whenever the assessee himself acquires the asset for his business or profession, what will be the actual cost? purchase price of the asset, all the costs involved in bringing the asset to a condition where you can say that now it is ready for its intended use, like transportation charges, loading, unloading charges, installation and erection charges, yes or no, all the expenses incurred till the date asset is ready for its intended use, all the costs you add. You also are supposed to add interest on loan taken to acquire such asset, and that interest will be from which date? Date of borrowing till the date on which the asset is put to use. Till that date, whatever interest is there, you add. Now this is the total amount which you have spent for the asset. But out of this amount, some amount is for those taxes also, no? Out of this total amount, some amount is for those taxes also, no? Which you have paid at the time of purchase of the asset, for which you are going to get ITC. So reduce that amount. Like excise duty is there, customs duty is there, then GST is there. For all those taxes, you get SENVAT credit or you get input tax credit. So if those taxes are going to come back to you, why have you shown those taxes as a part of your cost? Reduce them. And also reduce the cost borne by other persons. Plus minus all these things, you will get actual cost for those assets which you have acquired for your business. Got it, sir? Sure. Explanation number 1 to be done with section 35. We'll do it later. Explanation number 2 I will explain right now. Explanation number 2 says you are bringing one asset in your business. Yes or no? Did you acquire it? You spent money to acquire it? No. You got it as a gift from someone. You got it under a will. Some asset came to you by way of inheritance, by way of will, by way of gift. Now these assets for which you have not spent a single penny, now these assets you have started using for your own business. Possible or not possible? Tell me. So the assets which are used in your business, now these assets are not acquired by you. They were acquired by someone else known as previous owner. You are the current owner. So you have got this asset from someone else. He was the previous owner. He spent money and he acquired that asset. And from that person, from that previous owner, you are getting that asset in the form of gift, will, inheritance, etc. Now this asset you are using for your business. So in your business, what will be the actual cost of this asset? Don't say that it is not costing anything for me, so I will take nil. Don't say nil. Whatever was the actual cost remaining in the hands of that previous owner will now be treated as your actual cost. Meaning that previous owner acquired the asset for 10 lakhs. So how much he spent? 10 lakhs. Out of that, he already claimed depreciation of 3 lakhs. So how much was the remaining cost in his hands? How much was his WDV? 7 lakhs. If he would not have given this asset to you, this 7 lakh was anyway supposed to be given as a deduction to him only, no? From his business income. So this asset whose remaining cost is 7 lakhs would have been used in his business to earn his business income. From that business income, anyways, we were supposed to give that 7 lakh rupees of deduction to him. Now, is this asset used in his business to earn his business income? No, the asset has come to you. Now, this asset is helping you to earn your business income. So that 7 lakh which we were supposed to give as a deduction to him from his business income, why don't you only take this 7 lakh as a deduction from your business income? Because anyways, we were going to give the deduction for this 7 lakhs, no? Hello, sir. You cannot say that I will take the fair market value. Because if we don't define here, no, what you will say? If I would have gone in the market and bought the asset, this asset would have costed 15 lakhs. This is the fair market value of the asset. Allow me to take that fair market value as my cost. So you will try to do all such things so that your actual cost becomes high. Just thank us that we are not telling you to take 0, because your actual cost was 0 only. But don't worry, we will allow that much cost which was anyways allowable to him. Your previous owner, how much was allowable to him? 10 lakh he incurred. Out of that 3 lakh he has claimed, 7 lakh still cost remaining, no? WDV in the hands of previous owner. That anyways we were supposed to allow from his business income. Getting my point? If the asset would have been used in his business to earn his business income, we were supposed to allow this 7 lakhs to him out of his business income. Now, since the asset is not used by him to earn his business income, he has gifted the asset to you. Now, this same asset is helping you to earn your business income. So, that 7 lakh, which we were anyways supposed to give him as a deduction out of his PGBP income. Now, you take the deduction of that 7 lakhs. You take that 7 lakh as your cost. Getting my point? So, what will be the cost of this asset for you now? The WDV prior to gift, whatever was the WDV in the hands of previous owner, remaining cost will now be treated as your actual cost. That's it. Got it, sir? This was your explanation number 2. Now, explanation number 5 relates to building only. Only building. No other asset. Huh? No other asset. Only building. You will apply explanation 5. Building. You acquired that building for your personal purpose. You used that building for your personal purpose for 3 years or 4 years. After using for 4 years for personal purpose, now you have started using that building for business. Did you buy this building for business? No. You bought this building for your personal purpose. You used it for 4 years for personal purposes. Now, after 4 years, you are bringing this building to be used in your business or profession. What will be the cost of this building in your business or profession? Actual cost? No. Actual cost minus 4 years depreciation on notional basis. After reducing the depreciation for those 4 years for which it was used for personal purpose. Yes or no? Whatever the cost of that building will remain, no. Only that cost, only that WDV, remaining WDV will be treated as your actual cost for this building. We cannot allow you the entire actual cost which you had incurred. Getting my point? See, sometimes what used to happen, no? Assessees are having huge amount of profits now. Now, in order to reduce the profits, what assessees will do? Assessees will try to claim more deduction so that the profits will be reduced. So what they used to do, those buildings which they had acquired for personal purposes, no, they were trying to bring those buildings and in the business and telling the department that, see, we have now started using this building for our business. Even if the buildings are not actually used, huh? And they used to claim the depreciation on the entire actual cost. Actual cost was 50 lakhs. On that 50 lakhs, which was incurred 4 years back, you will now start claiming what? Depreciation. So you claim. And we are not going to come and check also. But wait, if we allow this, no, what will happen? The higher amount of cost will come. And that higher amount of cost, on that the depreciation will be very high. And by allowing you that depreciation, your profits will reduce very much. Do one thing, for those many years for which you have used for what? Personal purpose, no? Assume that for those years also it was used for business. How much depreciation we would have already allowed out of that actual cost for 4 years? Reduce that on notional basis. Whatever cost remains, no, whatever WDV of that building remains, no, prior to bringing that building in the business, yes or no? Only that much WDV of this building will be allowed. Only that much WDV will be taken as cost. Because this building was not directly purchased for this business. This was purchased for personal purpose. And now you are bringing for business. Getting my point? Will this explanation be applicable to all the assets or only building? Only buildings. Meaning that 4 years back I bought a car for 5 lakh rupees. personal purpose only. Now that car I am bringing in my business for business use. How much will be the actual cost? The actual cost which I have already incurred. There I am not supposed to do this. Getting my point? This will be done only in the case of building. Now come to question number 2, which you left. Now come to question number 2, which we left. Come. Please check. A car purchased by Dr. Soman on 10th August 21. Is it purchased right now or in the past? In the previous year, 21-22, the car was purchased for 5,25,000. Can I say this was the actual cost of the car? And it was purchased for personal purpose. Now that car is brought into professional use during the previous year 24-25. So in previous year 24-25, the car was brought into his profession, which was earlier used by him for personal purposes. Yes or no? When its market value of the car was 2,50,000. So will this market value be taken as your cost? Or the actual cost will be taken? Actual cost will be taken. What if this was a building? Then also the market value was not taken. Then actual cost minus the depreciation for 21-22, 22-23 and 23-24. For these 3 years, the depreciation would have been reduced on notional basis. Whatever WDV which was there as on 31st March 2024, that WDV would have been taken for the building as its actual cost. Now from 24-25 onwards, the depreciation would have been allowed on that actual cost of the building. Yes or no? But since it is not a building, it is a car, which is not a building. Therefore, explanation number 5 to section 43(1) is not applicable. Therefore, actual cost only, which is 5,25,000 incurred in previous year 21-22, will only be taken as actual cost. Getting my point? And if you read the answer, no, the same thing is given. But in that answer, read this note too. Read this note. They're talking about that building only, which I've already explained. Got it? This type of question will not come in the exam, don't worry. But this type of question can come as a part of adjustment. Now, in the question, they have given you a block of car, opening WDV and everything is given. Now, in the adjustment, they will tell you, in your business, you are bringing a car in this year. This car is not bought in this year. No. This car was bought in 21-22 for 5,25,000. The same question which is framed here, no, this will be given as a adjustment. Now, in the value of the block, you will do the additions. This car will come. Fair market value and everything will be given. They will give you the depreciation rate and everything for the car. Ignore everything. Whatever cost you have incurred for the car, no, 5,25,000 in 21-22, bring that cost only in the block. That's it. Getting my point? That's it. As simple as that. Just imagine how they are exploiting all these details in the question. You should be aware about those things. Okay? And the biggest mistake which we do, we just keep on solving the question without even, knowing that if this question is twisted. Just have an analytical mind. No. If this question was framed giving you the details of the building, if the same detail was given for the building, what would have been my answer? You have to think like that. Getting my point? What if this same thing is coming in my question, big question? So whenever you will be solving the big questions, no? While solving the big question, in some question, they will tell you to calculate depreciation. In that, they have given the block of car also, additions also. That time, this question should strike you there. That what if the thing which happened in question number 2, if that same type of adjustment was given here? If you don't think like that, no, your mind will not expand. Your thinking will not expand. You are not supposed to do only what I am doing. You have to think out of the box. You have to think a little bit more. Because we all are chartered accountants. Come on. What if this happens? Then what should I do? What if this, what if that happens? What I will do? Your mind should be working like that. And if you'll think like that, no, only then new question will arise. And you will try to find out, new questions will arise, new problems will you will face. And only then you will try to solve those problems. This will enhance your knowledge base. Getting my point? See, if I want, I can just tell you this and I can go. You will never know that how to, actually think about this. How to actually go about this from here. So if I'm giving a little bit of spark now, if you are getting influenced by my thinking like this, no, now from now onwards, you will start thinking like me. And if you will start thinking like this, what will happen? New problems, new question will creep up in your mind. And when these new questions will creep up in your mind, no, you will get new answers. Thereby, your knowledge base will increase. The role of the teacher is that only. But ultimately, you have to be that much proactive also. Got it? So teach us whatever is coming in the exam, we'll write and we'll pass. Then you will pass with only this much knowledge. Knowledge base will be very less. And just imagine if some twist they are giving in the questions and you don't have this kind of mindset. You will come out of the exam and you will be yelling, oh my God, the paper was very difficult. Papers are never difficult, I'm telling you. It's the way how you approach the subject. It makes it difficult for you or easy for you. Getting my point? So now let's come to the explanations once again. 43.1 defines the cost. But in these special situations, what will be the actual cost of the asset? Explanation number 1, special situation is given. What will be the actual cost? That we are going to see with section 35. Explanation number 2, saying that the asset which you are using in the business was not acquired by you. It was gifted to you. It came to you by way of will, inheritance. Now you have started using that asset in your business. So for this asset, what should be the actual cost which you are now supposed to take in your business? The WDV to the previous owner. If any building is there which was originally acquired for personal purpose, used for personal purpose for some time, and now that building you are bringing for your business use, what you will take as actual cost of this building? The actual cost which you have actually incurred, originally incurred? No, actual cost which you have originally incurred minus the notional depreciation for those years for which it was used for personal purpose, giving you the WDV of that building immediately prior to the date on which it was brought to your business. That WDV you are supposed to take as actual cost of the building. And this is only for building and not for any other asset, which is proved right now. Okay. Now coming to the next explanation, explanation 8, 9, 10 that we have already seen. Okay. Now if you'll go to explanation number 13 now, this explanation 13 I will be discussing with 35 AD. And there is one proviso also to explanation 13. That proviso also I will explain with 35 AD. So right now actual cost of the asset is done. All the explanation which are to be known by you are also done. 2 explanations I'm supposed to discuss. One I will discuss with section 35 and the second I will discuss with section 35 AD. You trust me, no? That I'm going to discuss this. You all will forget. I will never forget. Do you remember section 7? I will do with salary, and I did also. So which proves that you will forget, but I will not forget. Let's do and see the proviso to section 43(1). What is the meaning of proviso? Proviso means exception. This is an exception to actual cost. Meaning 43(1) says that what is actual cost? And proviso to section 43(1) will tell you this will not be treated as actual cost. Hello, this is an exception. This is not treated as actual cost. Sir, what is not treated as actual cost? Come, I'll tell you. If you are an assessee, you have acquired one asset for the purpose of your business or profession. Yes or no? And the actual cost of that asset, which is nothing but the capital expenditure which you are incurring on that asset, okay, that actual cost of that asset which you have determined as per 43(1), yes or no? You are now making the payment for that actual cost. Now tell me, if you are telling the department that actual cost of the asset, you are saying that it is 50 lakhs. How much is this? 50 lakhs. So the department will ask you, your income tax officer will ask you, how did you arrive at this 50 lakhs? You will say purchase price taken, all the cost incurred till the date when the asset was ready for its intended use. Interest also I have added. I have reduced the taxes amount. I have reduced the government subsidy and everything. I have incurred 50 lakhs on the asset. 50 lakhs is my actual cost. You are saying, if 50 lakhs is your actual cost, you want to claim this 50 lakhs as what? Deduction. Either fully or in the form of depreciation. You are going to take the deduction for this 50 lakhs, no? So you say that the asset is worth 50 lakhs, then 50 lakhs should go from your pocket also. The payment should happen for 50 lakhs also. Yes or no? If you are not making a payment of 50 lakhs, how can you say that the asset is worth 50 lakhs? How can you say that the cost of the asset is 50 lakhs? Have you made the payment of this asset? You will say, yes, I have made the payment. Show us the proof. What proof do you have? What proof will you show? See, in my bank statement, the entry appears. So just because you have withdrawn 50 lakhs from your bank does not mean that you have paid for the asset. You might have paid for some other things also. So withdrawal of 50 lakhs from the bank is not a evidence. 50 lakhs withdrawn from your bank, meaning that you have spent 50 lakhs. But was that 50 lakh actually spent for this asset or not? See, no sir, I have made the payment to this guy. This guy from whom I have bought. See, I have got the bill also. Then only you can say no, that this 50 lakh you have spent for the asset. Meaning there has to be a party from whom you are buying this. And to that party, you have actually made the payment. This is your expense. So for him also, it should be his income. You are saying that your expense is there. So at the same time, 50 lakh, he should also tell us no, that he is also earning an income of 50 lakhs. So you are saying, see, I have paid 50 to this party. But how will you prove that this 50 is paid to that party only? If the payment is made through prescribed modes. What modes? Prescribed modes. Number 1, account pay check. Bearer check, no. Cross check, no. Only account pay check. Account pay bank draft. ECS, electronic clearing system. NEFT, RTGS, Bheem UPI, Aadhaar UPI. Other online modes of other prescribed online modes. If you make the payment like this, no, then it will definitely reflect in your bank statement that 50 lakh is going. And also it will reflect that in whose account actually that money is going. It will prove two things. That your expense is genuine. This 50 lakh is genuinely claimed by you. And it will allow us to catch that fellow also. from the caller. Let's see, you want 50 lakhs for the asset. Have you shown this amount as your income? If not, he's gone. Because from your account only we came to know that he is earning income by selling you this asset. Getting my point? So the government will hit two targets by only this thing. So if the asset, what did I say? If the assessee, who is any person, yes or no? If that assessee has acquired any asset which he is using for the purpose of business or profession, so the acquisition cost of the asset is nothing but actual cost, which is nothing but capital expenditure, no? So this actual cost, the payment should be made for this actual cost. Payment, this actual cost must be actually paid. Only then you can say that you have incurred this actual cost. Only then come to us to claim this actual cost in the form of depreciation or under section 35, 35AD, etc. So this actual cost payment you are supposed to make. Now the payment which you are making for this actual cost, that payment in a day, in a single day, the payment which you are making in a single day to a person, in one day to one person, whatever payment you are making towards that actual cost, the payment is made towards that actual cost of the asset. And if that payment is made in a day to a person, and that payment is a single payment of more than 10,000, or that payment is in a day to that person, you have made multiple payments. In single day only, you have made him multiple payments. But the aggregate of all such payments is more than 10,000. Then please remember, this is not a small amount, this is a big amount for us. Up to 10,000 you make payment by any modes, we don't have any problem. But if in a day you are making a payment to a single person and that payment is made for the cost of the asset, then we want that this payment must be made by way of prescribed modes. But what you did? What you did? In a single day, to a person, the payment made was more than 10,000 and that payment was for the actual cost of the asset. That payment you made by way of any mode which was other than prescribed modes. Do you remember prescribed modes? So have you made this payment by way of prescribed modes or other modes? Other modes. Then such payment will not be treated as your actual cost. This much amount will not be treated as the actual cost of your asset. Now the government is compelling you to make the payment in prescribed modes. If you will not make the payment in prescribed modes, no, that payment to that extent your cost will not be treated as your actual cost only. So this stops the assessees to claim bogus amount, imaginary amount as what? Cost of the asset. This will stop you. And also the government will come to know that the payment is made to some party, he has actually shown that amount as his income or not. Getting my point, everyone? So proviso to section 43(1) says this, that this much payment which you have made out of the cost, no, this amount will not be treated as your actual cost. So out of your actual cost, whatever amount you have paid like this, that much amount which you have paid like this will not be treated as actual cost. So how much was the cost of your asset? 50 lakhs, no? Entire 50 lakhs will not be ignored. Out of 50, how much you are paying like this? So out of 50, 5 lakhs you paid in a day. Is it more than 10,000? You have paid that 5 lakhs by way of modes other than prescribed mode. You paid that 5 lakhs in cash. So out of 50, which was the cost of the asset, 5 lakh rupees of cost paid by way of any mode other than prescribed mode, that 5 lakh will not be treated as your actual cost. Forget it. How much remains now? 45 lakhs. Only that much will be your cost, provided that 45 lakhs is paid by way of prescribed modes. Getting my point? But what if the cost of the asset was only 9,000? Only 9,000. Actual cost of the asset was only 9,000 and you paid that cost by way of any mode. No problem, 9,000 will be treated as your actual cost. We don't have any problem if the actual cost paid in a day is up to 10,000. 10 or less, pay by any mode, that will be treated as your actual cost. But if the payment made in a day for the actual cost is more than 10,000, then that payment has to be by way of any mode other than prescribed modes. No, that payment has to be by way of prescribed modes only. But if that payment is made by way of any mode other than prescribed modes, then that payment, to that extent, your actual cost will be ignored. That much amount will not be treated as your actual cost. This is proviso. This is not your actual cost. So, whenever you calculate the depreciation, you take the actual cost now. How much actual cost you will take? Only those actual costs which you have paid by way of prescribed modes. And in every question which you have solved, everywhere it was written that all the payments were made by way of account paycheck. Hence, we were taking those amounts as actual costs. Hence, we were taking those amounts in calculations. But if anywhere it was mentioned that, okay, computer was bought for 2 lakhs. The payment was done by way of cash. That entire 2 lakh we would have ignored. Understanding? But everywhere the costs were paid by way of account paycheck, and account paycheck is a prescribed mode. Got it? Understood? Now, this is your actual cost and the proviso. See, proviso will be applicable every time whenever we are talking about actual cost. So, we will talk about actual cost in section 35 also. That time also this proviso will be applicable. We will be talking about the actual cost of the asset in section 35 AD. That time also this proviso will come there. That much actual cost which is covered by this proviso, which is not treated as actual cost, cannot be claimed under section 35 also. Cannot be claimed under 35 AD also, because that is not your actual cost only. Hello? And even that cannot be claimed in the form of depreciation also. Got it? Will you remember this? Done. Actual cost over. Now, this the same thing. Now, few important small discussions about depreciation. Okay, no? So, first discussion is claim of depreciation is mandatory. Claim of depreciation is mandatory, meaning that the assets which you are using for the purpose of your business or profession. Tell me, see, if I say that I am an assessee, okay, any person, now there are assets. These assets are used in my business or profession. Now tell me, this business or profession is giving me income. Am I earning income from this business or profession? So can I say the asset is helping me to earn this business income? This business income is derived by using these assets in the business only, no? Meaning that whatever cost which I have incurred, actual cost, meaning the capital expenditure which I have incurred on this asset, this cost is helping me to earn this income only, no? So don't you think this cost should be allowed out of this income only? This cost should not be allowed out of any other head, out of any other income. The cost which is allowing me, which is helping me to earn my PGBP income, that cost should be allowed From my PGBP income only, no? Hence, all the assets which are used for the purpose of business or profession, even though all those assets are capital assets, their cost and their calculation never happens in capital gains. All the assets are brought under PGBP head, even though they are capital assets. Their cost is a cost of capital asset. Still they are allowed from the business income only. And you are supposed to claim that from this business income only. This is compulsory. Now you will say, sir, if this asset which is used in my business or profession is my capital asset also. Yes or no? So what I will do, sir, I don't want to claim this cost from my business income right now. What I will do, no, sir, whenever I'll sell this asset in the future, no, at the time of sale of the asset in the future, I will calculate capital gain. That time I will take this cost under the head capital gains to calculate capital gains. No, not allowed, not allowed. You cannot do it. Earlier, no, under Income Tax Act, there was no requirement that the cost of the asset you are supposed to take only from business income. There was no requirement. So one assessee, what he did not claim the cost of the asset from the business income. He did not claim. 4, 5 years, 6 years, what happened? He used the asset in the business, but the cost of that asset he did not claim in the form of depreciation from his business income. 100 lakh was the value of the asset. What? How much? 100 lakh. For example, in the previous year, 21-22, not 21-22, if I say previous year 18-19. Previous year 18-19, he acquired one building. Okay, he acquired one building and the cost of that building was 100 lakhs at that time, meaning 1 crore. And he started using that building, this building from that year only, he started using in his business or his profession. So definitely this 100 lakhs starting from 18-19 only should have been allowed from his business income in the form of depreciation. What this assessee did? First year depreciation, nil. I don't want to claim the cost under the head PGBP in the form of depreciation. Second year was 19-20, he did not claim the depreciation. Third year 20-21, he did not claim the depreciation. Fourth year 21-22, he did not claim the depreciation. Fifth year 22-23 and then 23-24, he did not claim the depreciation. Now 24-25. In this year, no, this building was sold. This building was sold. And this was sold for 3 crores. How much he sold it for? Almost 3 times of the price at which he bought. 100 lakhs he bought. Now he is selling for 300 lakhs, 3 crores. Now tell me, is he selling the building used for his business or profession? The building was acquired for 100 lakhs. That building is a capital asset also. He knows that. Now, did he claim any single rupee out of the cost under the PGBP head? No. So what he said, I don't want to claim the cost from my business income in the form of depreciation. I don't want to claim small amount. No. Whenever I'll sell that building, no, that time I will calculate the capital gains of the building, because building which is used in my business is also my capital asset. So I will calculate capital gains at that time, and that time while calculating capital gains, I will reduce the cost. In the capital gain head only. Now what happened, see, right now under the head capital gains, there is no concept of indexation. It has been eliminated from this year. But mid of the year, 23rd July and onwards, indexation benefit is gone now. Now under capital gains, indexation benefit is not available. But when indexation was available, no, what used to happen? When you hold a capital asset for a long period of time, no, like for example, if this is an immobile property, you are holding it for more than 2 years and then selling it, the asset becomes your long-term capital asset. Asset becomes your long-term capital asset. And whenever the asset becomes the long-term capital asset, out of the selling price of the asset, to calculate the capital gains, out of the selling price of the capital asset, you are not supposed to reduce the cost. You are supposed to reduce the index cost. Index cost means for these many years, because of inflation, the cost would have increased. So don't reduce 100, inflate your cost by giving the indexation, your cost will increase. So now 100 lakh will not be allowed, inflated cost will be allowed. Inflated means cost inflation will be done from which year? From 1819 till 24-25, there will be inflation which will be included in the cost. And as a result of that, the cost will increase. And when the cost will increase, no, that cost will not remain 100, the cost will become more. For example, we did the inflation. And as a result of indexing the cost, I will not involve in the calculation, I am just saying. You got the idea? Because of the inflation, the cost will not be 100. Now this will be inflated because inflation is also included. So now that cost will become, this was 300 lakhs, no? Selling price. 300 lakhs. This was your selling price. Now the cost will be index cost of acquisition. And it came to 150 lakhs. Example. So without doing anything, 50 lakh cost increased. Just including indexation and waiting for these many years. Got it? Now how much is your capital gain? 150 lakhs is your capital gains. And now don't you think this 150 lakhs will become your long-term capital gain? Any capital gain arising on the transfer of the long-term capital asset is long-term capital gains. And by the way, long-term capital gains are taxable at normal rates. No, a small rate of 20%. Initially it was taxed at 20%, but now it is getting taxed at 12.5% only. But now they are not giving indexation also. But we have taken indexation, no? We have taken indexation, no? So we'll take 20% tax. So on this, I will have to pay how much tax? 20%. So 150 into how much? 20%. 30 lakh. I will pay as what? Tax. 30 lakhs I will pay tax. If I don't claim what? If I don't claim depreciation. Getting my point? So the income tax officer asked me, Acha, you are selling building. Okay. How much you are selling it for? 300 lakhs. Very good. How much was the cost of the building? 100. Oh, okay. Oh, you held this building for a long term. Okay. Hence the building became long-term asset. So you are indexing the cost. Very good. Perfect. Now while discussing with you, know, that assessing officer came to know that bloody this building was not your investment. This was the asset which was used in your business. And you did not claim the cost of this asset out of your business income in the form of depreciation. You have waived off the claim of depreciation for these many years. Now even he will be wondering that why the bloody hell he did not claim depreciation. If he would have claimed the depreciation, then what would have happened? Let me check. What was the cost of the asset? 100 lakhs. Hello? For the first year, 1819, assuming that the rate of depreciation on the building is 10%, yes or no? What was the first year's depreciation? This building would have been formed part of block, yes or no? So 1819, opening WDV of the block, 0. Add addition, 100. So this building would have formed part of block in 1819 only. Understanding? Now, first year depreciation how much? 1819 depreciation 10 lakhs. Yes or no? 10 lakhs. Then 90 lakhs. Then 1920 depreciation how much? Not 10 lakh. It is block. Written down value. Yes or no? It would have been 9 lakhs. Then it would have been 81. Then 2021, how much depreciation? 8.1. Reduce, you will get 72.9. Sure, no? Then 21-22. 21-22, 7.29. So 72.9 minus 7.29 will give you 65.61. Now for 22-23, it would have been 6.561. I'm writing all the amount in lakhs, huh? Okay. Then the 65.61 minus 6.561, 59.049. Okay. Now for 23-24, how much depreciation? 5.9049. Okay. Reduce this. Minus 5.9049. 53.1441. Wait. Now for 24-25, no depreciation will be given. Because in 24-25, he is selling the asset. So what will be the opening WDV in the block? One building, opening WDV will be this much. Addition in the block? No addition in the block. Deletion from the block? Yes, 24-25 building is going from the block. How much money coming? 300 lakhs. Now that 300 lakhs will be reduced out of this. So if I reduce 300 lakhs in previous year 24-25, what will be the 246.8559? And my dear friends, this is the selling price in excess of the value of the block. Don't you think that this would have been the short-term capital gain under section 5050? And short-term capital gain is taxable at normal rates. First, your gain, just check how much gain. There your gain was only 150. And the tax was also only 30 lakhs. 20%, yes or no? Now see the amount of gain. And on that, if you apply the normal rates, and let us say on the first 2,50,000 no tax. Hello. Then 2,50,000 to 5 lakhs. 5%, 12,500. Then 5 lakh to 10 lakh. 20%, 1 lakh rupees. How much is the income over and above 10 lakh? 246.8559. 8,559 into 1 lakh. 2 crore 46 lakh 85,590. 2 crore 46 lakh 85,590. Is it more than 10 lakhs? Yes. How much more than 10 lakh? Minus 10 lakh. You will get 2 crore 36 lakh 85,590. On that, you would have paid 30% tax plus 1,12,500 tax from the earlier two slabs. Your tax liability here would have been 72,18,177. 72 lakh rupees tax you would have paid if you would have claimed the depreciation properly. You did not do it. See, tax savings would have happened because of depreciation deduction. Every year you would have saved some tax also. Because every year depreciation was getting allowed. So because of that, your income was coming down every year. On that, tax savings would have happened. But that tax savings would not have been too much. Now just see how much tax you are paying. How much tax you should have paid? 72 lakhs. Just imagine during these years, your tax savings would have been 20 lakh also. Reduce that 20 lakh also out of this. 52 lakh still you would have paid to the government. How much you are paying? Isn't it a loss to the government? Would they like it? So immediately the assessing officer asked me, sir, no sir, you cannot calculate capital gains like this. No sir. Since the asset was used in your business, no sir. Hello, sir, since the business asset was used in your business, no. So the cost of the asset should be claimed from the income of the business every year like this, sir. Sir, every year like this, it should have been claimed in the form of depreciation. And sir, when finally this asset you are selling, no, right now for 300. So the 300 value should not be calculated separately under capital gain, that 300 should have been adjusted from the value of that block. So your capital gain would have been this much, sir. And this capital gain would have been your short-term capital gain, sir. On that, you should have paid this much tax. But how much you are paying, sir? This much. We don't accept it. We are demanding this much tax from you. Hello, we are demanding this much tax from you. The assessing officer denied that no capital gain, only this capital gain. And depreciation should have been claimed by you. You know, assessee fought the case. Assessee said that I don't want to claim the cost under PGBP head in the form of depreciation. Then why are you compelling me to claim that cost under the head PGBP in the form of depreciation if this is my capital asset and I can claim the cost very well at the time of selling this capital asset? I want to claim it like that. And if it is giving me some benefit, then why are you compelling me to pay more tax like this? Getting my point? And where in your law it is written that claim of depreciation is mandatory? Claiming the cost in the form of depreciation out of the PGBP income is mandatory. It is not mandatory. If I have the option, no, I will definitely choose the best option available to me. And this is the best option which I am going to choose now. And even your law does not want that I should claim the cost mandatorily from PGBP head in the form of what? Depreciation. Then who are you to tell me? You know this case went till Supreme Court and assessee won the case. And the Supreme Court also said that if your law does not make the claim of depreciation mandatory, law does not tell you that mandatorily claim the cost of the asset under the head PGBP in the form of depreciation. Who are you to tell the assessee? Law is silent. So assessee can very well take the advantage of the most beneficial thing which he can do. And you cannot compel him to do this. Getting my point? Assessee won the case. He actually paid this much tax. Now just imagine if everyone will start doing this. Hence, when that Supreme Court judgment came, no, that same year, the immediately following budget, amendment was made in section 32, depreciation provision. One explanation was inserted that if you are using an asset for the purpose of your business or profession, which is giving you business income, the cost of that asset has to be claimed under the head PGBP only. It is compulsory to claim depreciation. Now, even if this is an option, no, you cannot take. Because now the law itself is making it compulsory to claim depreciation. Now all the calculation will happen like this only. Getting my point? Hence it is mandatory to claim depreciation. Ask this concept to any of your friends and tell me whether they know this or not. Tomorrow you are going to go to the library. Ask the final CS students about this. Why this depreciation claim is mandatory? Please ask. And what Anna is telling, tell me. They'll not know this logic only. First of all, they'll not know, depreciation claim is mandatory. Why so? I don't know, no? That is why I'm asking him. Don't tell him the logic, okay? Logic should be known to us only. Yes, don't tell them the logic. You also ask, Kaushik. Okay, should I move ahead? So this is claim of depreciation is mandatory. Actual cost of the asset until and unless allowed fully under the head PGBP. See, there are provisions under the PGBP head which allows you to take the actual cost fully, section 35D. Till the time your provisions are not specifically telling that this cost will be allowed fully. If any asset is used for the purpose of business or profession, 100% of its cost has to be claimed in the form of depreciation only. No other option. Mandatory. If you forget also, no, we will call you. come, we are giving you depreciation. For other expenses, they will not do. For this, they will definitely do. Got it? Sure. Now, the remaining part, last part. See, I'll give you one example, then you'll understand that entire part which I'm going to explain. Okay? See, this is my previous year. Okay? Previous year starts from 1st April 2024. It ends on 31st March 2025. Now, in this previous year, no, there is one company, X Limited. X Limited is doing a business. And in this business, X Limited is using some assets. On that, depreciation rate is 15%. Assets, can I say plant and machinery? Let's write down plant and machinery. So in the business of X Limited, there was a block of plant and machinery. The opening value of the block was, example, as on 1st April 2024, it was 40 lakhs. Okay, this was the opening WD. Now what happened? No, X Limited was doing its business. From 1st April, the business X Limited was doing. Now in this business, already some plant and machinery was there since the beginning of the year. Now while doing the business, during the previous year, X Limited acquired one more plant and machinery. Example, X Limited acquired a plant and machinery on 1st of November 2024. A new plant and machinery whose cost was 14,40,000. Example, 14,40,000. This new plant and machinery was acquired. Who acquired it? X Limited. When it was acquired? After my birthday. Meaning that definitely it is put to use for less than 180 days. Sure? Now don't you think that the new plant and machinery will be added to this block? And now during this year, no machinery, no other machinery is bought. Only this was bought. And out of the total machineries which are there in the block now, nothing was sold also. Okay. Now the time is passing on. Now, on 1st of January 2025, one incident took place. What is happening on this, On this date, amalgamation is taking place. And now this X Limited will be amalgamated with Y Limited, new company. So the entire business of the X Limited will be taken over by Y Limited. So when the business will be taken, definitely the assets will also go to Y Limited. This entire block, along with the business, this entire block already having plant and machinery, and even the new plant and machinery which is brought, this entire block will now be along with the building, along with the business, transferred to new company. Now, from 1st of January 2025, if the business is now continued by whom? Y Limited. So definitely this plant and machinery and the new plant and machinery in the block will now be used in that business only by Y Limited now. Understanding? Now who will do the business? Y Limited. Y Limited will be doing the same business. Y Limited will be doing. So definitely if the same business Y Limited is doing, so the plant and machinery of this block will now be used by Y Limited. So as on the last day of the previous year, what did I say? As on the last day of the previous year, business is in existence. Yes. And all the assets in the block are also there in existence. Yes. But now the assets are not used by X Limited. As on the last day of the previous year, the assets are used by Y Limited. Entire block is there with Y Limited because the entire business is there with Y Limited. Now tell me, will there be depreciation calculation for this block? Yes, business is going on. So in this business, whatever plant and machinery is there, which is already there from the beginning, whatever new plant and machinery is coming, minus the deletion, whatever remaining as on the last day of the previous year, on that the depreciation will be calculated. How that depreciation will be calculated? Calculate assuming there is no amalgamation in between, no? Forget about the amalgamation. Business is there from 1st April to 31st March. Yes. Assets are there from the 1st April till 31st March. Some new assets are coming, some are going. Do the same thing which we are doing. Calculate the value of the block as on the last day, because business is also there, and in the business block is also there as on the last day. So forget about the fact, no, that amalgamation has happened. Can you calculate the closing value of the block? Yes. Opening will be 40 lakh. Add additions less than 180 days, 14 lakh 40. Add addition greater than 180. No addition, less deletion. 54 lakh 40,000 will be the depreciable value as on the last day. Block assets are also there. Value is also there. As on 31st March, depreciation will be calculated. Now depreciation on 14 lakh 40 will be at half rate, and depreciation on the remaining 40 lakh will be at full rate. Did you calculate the depreciation? So total depreciation which will be there. Now the problem arises, the depreciation which will be calculated as on the last day will be claimed by X Limited or Y Limited. Who will claim this depreciation? Depreciation calculation happened for the full year, huh? At full rate or half rate, calculation is not going to change. You are supposed to follow exactly the same thing which you are going to do, which you have been doing. No need to change those things. Getting my point? But wait. Now the depreciation which you have calculated, see, can I say as on 31st March, the opening will be 40. Hello? Add additions greater than equal to 180, less than 180, greater than equal to dash, and here it will be 14 lakh 40. Now total will be 54 lakh 40,000 minus deletions are nothing because no assets are sold from the block. Then the final value, there are some assets also in the block, and at the end of the year the value also remains how much? 54 lakh 40. On this now I will have to calculate depreciation. Now out of this, can I say out of this 54 lakh 40 on 14 lakh 40, I will calculate depreciation at the rate of 15%? No, at half rate. So how much will be the depreciation here? 1 lakh 8,000. Okay, no? Wait. Please pay attention over here. And on balance 40 lakhs, my depreciation will be at full 15% rate. That will be 6 lakhs. So total depreciation claim will be 7 lakh 8,000. Okay, no? Now can you tell me one thing? Please tell me one thing. This entire 7 lakh 8,000 depreciation will be claimed by X Limited or will be claimed by Y? Kaushik, that judgment came very long back. Okay. It came in early 80s. Okay. Even I was a kid at that time. So from that time only they have made it compulsory. Okay. So tell me, what to do here? Who will claim? You are not giving me the answers. X Limited will claim because from the beginning the X Limited, no, Y Limited, because in the end the assets are with Y Limited. No. Any one will not claim. Both will claim. Now this depreciation will be apportioned based on the days for which the asset was used. See, we are not calculating the depreciation on the basis of number of days. The depreciation is calculated for the full year, either at half rate or full. Calculation is done for the full year. But now whatever depreciation which is calculated, no, in such type of cases, this depreciation will be apportioned. Some will go to X, some will go to Y. Now tell me, this apportionment will happen based on what? Based on the number of days for which the asset was used. Now tell me, this asset 14,40,000. This asset came in the business prior to amalgamation. On what date? 1st of November 2024. So from 1st November 24, this asset was there in the business. Till the last day, no? Till 31st March 2025. Getting my point? So how many days this asset was used in that business? Total use of the asset in the business. It would be 151 days. Calculate. November 30 days, December 31, January 31, February 28 and March 31. Total 151 days the asset was used in the business. But don't you think out of that 151, from January it is used by Y Limited for 90 days? January 31, February 28 and March 31. 90 days the asset was used by Y Limited. And prior to amalgamation, for the first 61 days, the asset was used by X Limited. So can I say this entire depreciation is on that asset which was used in the business for 151 days. Out of that, 61 days was used by X Limited and 90 days it was used by Y Limited. Hello, sir. Understanding, sir? So apportion this depreciation in that same ratio, no? This depreciation divide by 151 into 61. 1,08,000 divide by 151 into 61. 43,629. Are you getting it? So 1 lakh entirely will not be allowed to X Limited. 1,08,000 entirely will not allowed to Y Limited. Out of that 1,08,000, which was for that asset which was used in the business for 151 days, 61 days the asset was used by X Limited. So the proportionate depreciation for those 61 days should be available to X Limited. Yes or no? So minus how much? 1,08,000, you will get 64,371. 64,371. How did you get it? 1,08,000 into 90 divided by 151. Getting it or not? So for these 90 days, this will be available to Y Limit. Now talk about this 40 lakhs. Can I say the assets, these assets, for this assets, full year's depreciation is claimed. Full year's depreciation is claimed. Meaning these assets were used in the business from 1st April 2024 to 31st March 2025. These assets were used for full 365 days. But don't you think that out of 365 days, 275 days the asset was used by X Limited till 31st December. And from 1st January till 31st March, 90 days the asset was used by Y Limited. The asset which were in the block from the beginning. Out of those assets, friends, those assets from the 1st April till 31st December, they were used by X Limited. And the same assets were used from 1st January till 31st March for 90 days. They were used by Y Limited. So can I say this 6 lakh is the depreciation on those assets which are used for the full year? Out of that, 275 days it is used by X Limited. So proportionate depreciation for 275 days should be allowed to X Limited. Can you calculate? So what will you do? 6 lakh into 6 lakh divided by 365 into 275. You will get 452,055. 452,055. And the balance 1,47,955 will be available to Y Limited. Getting my point? Now see color combinations. Color, pink color. color pink color, color blue color, color blue colors. Out of 1,08,000, this much will be allowed to X. Out of 6 lakh, this much will be allowed to X. So how much will be allowed to X? Total 43,629 plus 452,055 will give you 495,684. Sir, this plus this will give you how much? X Limited will claim 495,684. And sir, this plus this will now be claimed by Y Limited. So 64,371 plus 147,955, 2,12,326. Add both of them. You must get 7,08,000. Sir, how come you are getting 7,08,000? This 1,08,000 only and 6 lakh only, total 7,08,000 is apportioned, no? So the total should also come 7,08,000. Common sense. This way, the depreciation apportionment will happen. So this can happen in what scenarios, what cases? In the case of amalgamation, this can happen. In the case of demerger also, this can happen. This can happen in the case of succession of the business. Meaning, father dies and after father, the son inherits the business. Or it might also happen that there was a company doing this business. Now company got converted into, same year, the company got converted into LLP. Business is same. But earlier the business was done on the name of company. Now the business is done on the name of LLP. So earlier who was having this business? Who were using that? Company. Now that same business after conversion is done by LLP. So who is using the asset? LLP. So both should get the depreciation, no? When a sole proprietary concern or a partnership concern gets converted into a company, then also this can happen. Getting my point? So the calculation of depreciation will happen for the full year at full rate or half rate. But whatever depreciation is calculated, that depreciation will be apportioned based on the number of days the assets were used by these assessees during the previous year, and this can happen in the course of amalgamation, demerger, succession, inheritance, conversion, etc. etc. Getting my point? Now they can put you into a trouble here. Wait. Look at me here. See, when this new plant and machinery was bought, prior to amalgamation on November it was bought. They will say that this is bought after amalgamation on 1st February. Possible, no? Till amalgamation, no new asset was bought. But once the amalgamation was done, in that same block, new machine was purchased on 1st February. Possible or not? This same 14,40,000 was acquired on 1st of February. Now tell me, 1st of February acquired, meaning less than 180 days. This will remain same. No change at all. This also will remain same. No change at all. But if you bifurcate now, no, you are gone. No need to bifurcate. Because after amalgamation, it was acquired. So who was using that asset? Only Y Limited. So that entire 1,08,000 will be claimed by Y Limited. Got it? Sure? This is the most difficult part of depreciation. See how difficult it is, no? Very difficult, sir. Now the last point in depreciation, then the depreciation will be over. Last point. Okay. Pay attention. See, whenever you calculate your profits and gains from business or profession, what you first take? You take your business income, meaning all the incomes which happens in the business. Okay. For example, your business income was 10 lakh, meaning your main business income. sales, gross receipts and all. Now from that business income only, you reduce what? Business expenses. The expenses to run that business. You incurred these expenses to earn that 10 lakh rupees of income. Yes or no? So the amount of expenses was 8 lakh rupees. Possible or not possible? Possible, sir. So how much is your profit now? Come on, tell me. 2 lakh rupees is your profit. So the business is giving you a profit. Business is not a loss making, it is a profitable business. So whenever a business profit or business loss will come, it will come here. Now, when you are claiming this expenses, no, all the incomes of the business minus all the expenses of the business, meaning revenue expenses incurred in the course of business. What? All the revenue expenses like salaries paid, purchases, then commission etc. given, interest etc. given, then electricity charges, advertisement charges, blah blah blah. Many expenses happen. All those revenue nature expenses are reduced here. Depreciation is not a revenue expenditure. So whenever you are reducing these expenses, no, here you never count depreciation. Depreciation is what? It is not an expense. Depreciation is an allowance of the capital expenditure incurred by you for the purpose of your business. So how that depreciation can be claimed as this expense? So depreciation will definitely be not recorded here. So first, to determine the profits of the business, no, you are supposed to take incomes of the business minus all the revenue expenses which are incurred in the course of business or profession, reduce them, whatever will be there, that will be your profit. Now, whatever costs which you have incurred, capital expenditures which you have incurred for the purpose of business, now it is a chance for you to reduce all of them. All the capital expenditures, meaning the assets acquired for the purpose of business, cost was disallowed, no? Now out of that cost only, some cost you are taking in small parts in the form of depreciation, but that depreciation will be claimed from this profit. That depreciation never forms part of business expense because that is not an expense only. Getting my point? That depreciation is what? That is an allowance for the capital expenditure done, incurred for the purpose of your business. That capital expenditure is given to you in small portions. That does not mean that it is a business expense. Business expense is different and capital expenditure allowed in small parts is different. This covers all the revenue expenditure, and depreciation by itself, it is not a revenue expenditure. It was a capital expenditure, part of the capital expenditure which was disallowed. So always reduce depreciation after this only. Getting my point? Now what will happen over here, you know? You will reduce the depreciation. Now tell me, depreciation under section 32. Meaning the depreciation is calculated as per your wish, as per your method, or you have calculated it as per section 32. As per 32. Additional, normal, every depreciation you calculated. Now the amount of that depreciation was 3,20,000. How much? Now, positive or negative? Negative 1,20,000. Now, if you will say that this negative 1,20,000 is your business loss. If you say that this is your business loss, so business losses, what happens with the business loss? The set off of the business loss happens, set off and carry forward of the business losses happen as per section 70, 71 and 72. Section 70 says that loss of any business under the head PGBP can be adjusted out of the profit of any business. But what if there is no profit in the PGBP head? Then 71 says that if the business loss of any business cannot be adjusted within the same head, it can be adjusted against any other head except salary. Sir, what if I don't have other heads also? Then don't worry. Section 72 will allow you to carry forward. Carry forward in the subsequent year. In the subsequent year, from any business income. What did I say? Any income? No, no. In the subsequent year, from any business income. You can have the business income of the same business. You can have the business income of any other business in the future, no? In the subsequent year. From that business income, carry forward this loss and take the set off from that business income in the subsequent year. Now somebody will say, sir, if in the next year, if there is no business income, then can I take the set off from other incomes? No, only business income. Sir, what if I don't have a business income then? Don't worry, carry forward in the next following year. In that year, you might have a business income from the same business or any other business. From that you can claim. Sir, what if in the second year also I don't get any business income? Don't worry. Next following year, third year you will get. Likewise, you can carry forward for 8 years. This happens with business loss. This happens with business loss. But my dear friends, the amount which you are calling as your business loss, no, is not your business loss only. This year your business is giving you a profit of 2 lakh. But the 2 lakh worth of profit of your business was not enough to absorb this year's depreciation. So 1,20,000 depreciation still remains. This is unabsorbed depreciation. This is not business loss. Out of 320, this 120 remains, no? So this 1,20,000 extra depreciation could not be adjusted in this year's profit, because this year either there was no profit or there was profit which was not sufficient to absorb this entire depreciation. So instead of calling this negative 120 as your business loss, section 32 subsection 2 says that call this amount as your unabsorbed depreciation. We call it UAD also. What we call it? UAD, unabsorbed depreciation. Now what you will do with unabsorbed depreciation? No. First of all, you are supposed to call this amount as unabsorbed depreciation. Who is telling you to do that? Section 32(2) is telling you don't call this amount as your business loss. Call this amount as your unabsorbed depreciation. Now after calling this amount as your unabsorbed depreciation, do one thing. Take the set off of this unabsorbed depreciation from this year's business income. If no business income, any other head income except salary. If no other income, then carry forward, and after its carry forward, subsequent year, any income except salary. Business loss, no. After carry forward, only business income. And carry forward was for 8 years only, maximum. But unabsorbed depreciation, in the same year, any business income or any head except salary. But if cannot be adjusted in the same year, it can be carried forward to subsequent year. And in the subsequent year also, it can be set off against any income except salary. So subsequent year, can you have business income? Yes. Against that, it can be set off. Subsequent year, if no business income, then don't worry. Any head income except salary, you can set off. So subsequent year, I don't have any business income also, I don't have any other head income also, then don't worry, carry forward to the next year. In the next year, any income except salary. Hello, sir. Sir, next year also I don't have. Don't worry, you will be allowed to carry forward this unabsorbed depreciation for indefinite period. What period? Indefinite period. Got it? Now just see. It could have been a blunder if you would have called this amount of business loss. Because after carry forward, it is allowed only from business income. But unabsorbed depreciation is allowed from any income except salary. The carry forward was restricted only for 8 years. But unabsorbed depreciation can be carried forward for indefinite period. Understanding or not? Business loss, when business loss comes, I'll tell you, wait. This 10 lakh is same. Now here 11 lakh expenditure income. So negative 1 lakh. And this 3,20,000 remaining same. Now there will be total loss of 420. Now in this 420, no, there is 1 lakh of business loss and 3,20,000 of unabsorbed depreciation. Getting my point? This is your business loss. 1 lakh. After reducing what? Expenses out of your business income, if that amount comes negative, then that is known as business loss. Now what you will do with this 420? Come on, tell me. Out of this negative 1 lakh, what will you call this? You call this business loss. And on this you apply 70, 71 and 72 provisions. And on the remaining 3,20,000, which you call this amount as your unabsorbed depreciation, and you apply 32.2 on this. But it's sir, this is your unabsorbed depreciation, friends. Done. Will you remember this? So this is the end of what? Depreciation provision. Done, sir? This is the end of depreciation provision. And now the next section we are going to start is section 35. Okay. Should we start? Pay attention. See, section 35 now talks about two things. First of all, before we move on to section 35, I would like to tell you one thing. I am Professor Umang Thakkar. I am teaching you direct tax. We are into the direct tax syllabus. We have completed many things. We are into the PGBP chapter. In the PGBP chapter, what all incomes are taxable, do you remember? We did 5,000 years back when dinosaurs were alive. That time we did, you know. Do you remember? 5,000 years back, that time I told you that which incomes are taxable under PGBP. Main business incomes, incidental business incomes, specific charge income, section 41 D in PGBP. These incomes are taxable. Now from this income only you are supposed to calculate the profit, no? So to calculate the profit, you will get some deductions out of the incomes. First, section 30, building used in the business or profession, no? Rent, rates and taxes, insurance premium and repairs of that building, no? Reduce out of this income, allowed, section 30. Plant and machinery, furniture used in the business, no? Repairs of the plant and machinery and insurance premium of the plant and machinery, expense, no? Reduce. Wait, the assets which you are using for the purpose of business, no? Any assets, intangible, tangible, intangible other than goodwill, tangible other than land, whatever assets which are used in the business, which are owned by you, whose actual cost you have incurred, that actual cost also allowed as a deduction out of your business income, but not fully, in small parts, in the form of depreciation that we have just now completed. Some will be calculated normally, some will be calculated additionally, some will be terminal depreciation. Getting my point? This much we have done. See, the things are very easy. But when you get inside the provisions, no, you forget that bloody what we are doing exactly. So it becomes very difficult for me to, sometimes explain that, see, we are doing a simple thing only. We know what are the incomes. Now, from this income, what all things we can reduce, we are seeing all those things under the second part, deductions. Section 30 says, these 4 expenses you reduce. Section 31 says, these 2 expenses also you can reduce. Section 32 says, actual cost of the asset, don't reduce fully, reduce in small parts in the form of depreciation. Some part will come for this year's, some part will be reduced from this year's income. Balance part will be carried forward to the next year's to be claimed from next year's business income. Yes or no? Subsequent year's business incomes. Now, there is one more thing which they are telling you, that from your business income, you can reduce this also. But that is given in section 35. Section 35 says, that if you have incurred any expenditure is incurred for scientific research. What, sir? Expenditure you have incurred for scientific research. That expenditure, we will allow you that, okay, reduce this expenditure also out of your business income. Not just the expenditure which you are incurring on scientific research. The section 35 says that even if you have made some donations means contributions to some approved institutions for scientific, statistical, or social sciences research. So research is happening in social sciences, some statistical research is happening, some scientific research is happening. Who is doing that research? You are not doing, somebody else is doing. Some approved institutions are doing those researches. So go and donate money to them also to conduct their scientific research. Yes or no? So whatever amount you have donated to someone else is your expense only. We will consider that also as your business expense. Reduce that also out of your business income. But wait, if you will follow 115 BSE or not. 115 BSE followed, 115 BSE not followed. 115 BSE followed, 115 BSE not followed. Expenditure on scientific research, hello sir, expenditure on scientific research will be available whether you follow 115 BSE or you don't follow. But the donations will be available as a deduction under section 35 out of your business income only if you don't follow 115 BSE. Meaning if you are following 115 BSE, no, default tax regime, you are going to get the deduction for scientific research expenditure, but you are not going to get the deduction for donations made for research, etc. This will not be allowed here. Got it, sir? Be very careful, huh? Very careful. Additional depreciation not allowed if you are following 115 BSE. And second, this thing is not allowed if you are following 115 BSE. 3 places under PGBP head where deduction is not given if you follow 115 BSE. 1. Additional depreciation not given. 2. Under section 35, the deduction available for donations to scientific research, etc. Donations for scientific, even that is all. See, they are telling that 35 will not be. No, 35, whatever other things are there, you claim. But the donations which you are making for scientific research, etc., for which you are getting the deduction will not be available if you follow 115 BSE. And there is one more section, 35 AD. What? 35 AD. Specified business. So the deduction which is available for specified business will be available only if you don't follow 115 BSE. But if you follow 115 BSE, then the deduction under section 35 AD will not be available. 3 places. Please be very careful. Do you remember salaries? What is allowed in 115 BSE? What is not allowed? In house property also there was one thing. So slowly and gradually we are building our base for 115 BSE also. So at the time when I will be explaining 115 BSE, no, that time you will be knowing that what all things are available under 115 BSE and what all things are not available. Then I'll have to just tell you the tax rates and other few important things of 115 BSE. Then I'll not have to explain all these things because this is already known to you while doing those chapters only. So when you will calculate your total income and you are following 115 BSE, that time in your total income, will you calculate salary? Yes. But don't claim those exemptions. 1014. Except traveling daily conveyance, they are available. But other than that, That is also available. Handicap 3200, that is also available. Don't claim 1013A. Don't claim 10 subsection 5 LTA. Don't claim HRA. Hello. Don't claim other deductions 16 class 2, 16 class 3. But claim standard deduction, that is allowed 75,000. Salary will be calculated. Then house property, don't claim SOP interest. House property is calculated. Then PGBP will be calculated. Don't take these three deductions, calculate your PGBP. Whatever calculations you are doing, this is happening as per 115 BSc. And your total income will be calculated without taking all these exemptions and deduction. And on that total income, you are supposed to apply 115 BSc rates. That we are going to see later on. I'm preparing you for that thing. Getting my point? So every damn single thing which I'm speaking in front of you, has a link. Somewhere or the other, everything is linked. Okay. Now, these two deductions, these two expenses, one expense and two deduction. See, simple I'll tell you. I don't have to discuss also section 35, but still I will have to discuss section 35 for few important things. If I tell you, whatever expenditure you have incurred, claim the deduction. Revenue also, capital also, fully allowed. Even if you are buying the asset for scientific research, entire cost of that asset is allowed as a deduction, except cost of land. Because land is not covered in PGBP head. Getting my point? So any asset you are acquiring for scientific research, you are doing capital expenditure on scientific research. Hello? Full amount of that asset allowed at once. No need to claim it in the form of depreciation. Claim it fully. But can you incur some revenue expenditure? Yes, claim the revenue expenditure also. So from your business income, reduce what? Revenue expenditure incurred for scientific research. Reduce what? Capital expenditure other than cost of land. Claim that amount also as a deduction. Done. Full amount will be allowed. Sir, donations I am making for approved institutions. These institutions are doing what? Different types of research. And I am making the donation to these institutions. These are approved institutions. Whatever donations you will make to these institutions also, even those donations will be allowed as a deduction. Meaning from your business income, claim these donations also as your deduction. Getting my point? But only if you are not following 115 BSc. If you are following 115 BSc, then don't claim this also. Getting my point? 100% full amount is allowed. Earlier, 5 years back, prior to 2020, revenue and capital expenditure in some cases were allowed 150% under this section. 150%. Donations to certain institutions, certain specific type of donation, 125%, 150%, 175%, even sometimes 200% was also allowed. Meaning you are spending only 100, but the deduction you are getting of 200, meaning that 100 which you have not spent, that is also allowed as a deduction. This used to happen earlier, 5 years back. The entire charm of this section is gone. That time I used to, I used to tease my students like anything in this section. I used to confuse the students like anything in this section. Percentage was there, no? What if this one? Where you will claim? How much you will claim? And this used to be very interesting. But now the entire charm is gone. Whatever done, fully. That's it. But few important things which we are supposed to keep in mind while claiming this deduction, that we are going to discuss. Understanding? So this discussion I'll take up tomorrow. Okay. Tomorrow section 35 AD will be completely done. Few questions also we will solve. And then we'll enter into 36. Section 36 is done, meaning almost the deductions will be over. Then only 37(1) will be remaining. Then disallowances. So this chapter will not take more time. Now the big section, depreciation, is over. So now we are at very, at such a stage, where we are at a relief now. Depreciation is done, now everything in this chapter is manageable. Everything will happen fast. But We have to put a lot of efforts in 35 AD. Few important things are there in 35 AD. Few important things are there in 35. There we'll have to spend a little bit time. Okay. Otherwise, everything is very easy now. Remember what we are doing, where we are exactly. So you are following a path. I have told you from income, reduce this, reduce this, reduce this. So we are now at a place where we are knowing those things which are allowed to be reduced out of the incomes. One by one, we are completing. Then we'll be moving to the third part of the chapter. In the third part, no, these things don't reduce. Disallowances. So whether you remember deductions or not, but you have to very importantly remember the disallowances. See, deductions you will be able to identify by applying common sense also. That this expense can happen in the course of my business or profession. Common sense can be applied if you don't remember the section. But in disallowances, no, you have to remember exactly the provisions also and how the disallowances are getting attracted. So that part becomes very important. Getting my point? So we are doing the things very slowly, very steadily. Don't worry. When the main question will come, no, you will know that what type of chapter this is. People are, making a hype about this chapter that this is very difficult. Bullshit. Very easy chapter. I told you within 1 minute you will get the answer on your calculator. And the time when I'll solve the first question, no, that time I'll tell you, see your watch. And you'll come to know within 1 minute the answer will be on your calculator. But for that we have to, put this efforts. Then see how easy this chapter will be. 15 to 18 marks minimum from this chapter. You'll have a command over that. And if that command is not there, it is useless to teach, no? This is my strength, this chapter. Okay. So we are going to meet tomorrow. And tomorrow same time we are meeting. And tomorrow we are doing many things. Many interesting things are supposed to be done tomorrow. Okay. So till then, see you all. See you all tomorrow. Okay. Bye bye. Bye.